particularly on the service side. People do want to get out there and they do want to travel. So this long-awaited move back from the good spending, the pandemic winners, to the reopening winners, that's still really happening right now.
Plenty of earnings news today. Verizon Communications has cut its full-year sales growth forecast. Verizon Communications shares, they are trading lower right now. We've got Verizon down by 5.9%. American Express reported a bigger than expected increase in costs as the credit card giant spent heavily on rewards and other perks to retain and attract customers. American Express down 1.8%. HCA Healthcare shares had their biggest drop in 2 years after the hospital operator indicated that higher labor costs will carve into results this year. Its shares plunging now by 18.9%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Happy Friday, everybody. Live from the Bloomberg Interactive Brokers studio, streaming on YouTube. It is TGIF Friday, April 22nd, 2022. And we are definitely seeing a risk-off in stocks and bonds today. Earnings and some worries over those aggressive rate moves potentially by the Federal Reserve, freaking everybody out again.
Yeah, especially tech stock. The NASDAQ 100 is heading to its worst month, Carol, since November of 2008.
Do you know what's the best performing stock this week?
I do not know what the best performing stock is this week.
I'm not going to tell you. Everybody's going to have to stick around to find that one out.
I'm going to find out while you're
talking. No, don't cheat. We're going to get to the markets in just a moment. We're also going to hear from U.S. Treasury Secretary Janet Yellen, our David Weston, who was just on before us, catching up with the former Fed chairman, who talked about many things, including a tight labor market. So we'll get to that in just a moment.
On that, we're going to tell you about the latest novelty and benefit to help companies find and keep workers. It's pricey, but it's increasingly important.
It's not free ice cream?
No, it's not free.
No, but it could be cold in a weird kind of way. Oh my God, that is so weird.
You went there.
All right. Also, we've got the true story of, it's Friday, the true story of hijacking, murder, and a global maritime conspiracy. This reads like a streaming series.
Yeah, and another true story about crypto trading addicts. It's the most read story on the Bloomberg today. People are going into rehab.
Well, gambling, addiction, it happens. We've also got Earth Day. We've been talking about it all week. We've got some investment thoughts for a sustainable, climate-conscious world, and then ethically sourced footwear. I've been checking it out, so we're going to talk to some co-founders of a cool company that's doing that.
Yeah, you've been trying them on.
I have been trying them on. They did fit.
Nice.
All right, first up, you guys want to know about the market, so let's get to the Market Drivers Report. Let's set that Business Week agenda. And joining us is Kriti Gupta, markets correspondent at Bloomberg, here in our Interactive Brokers studio. And on the phone from White Plains, New York, Vince Signorella, global macro strategist. All right, Kriti, risk off, certainly with the equity trade and across the board.
Yeah, fast and furious selling, I think, is the best way to put it.
A lot of volume?
Actually, well, it depends on the index you're looking at, because I believe the NASDAQ is light on volume. We're looking at down about 12% on a 5-day moving average. But if you look at the S&P 500, you're up. So it tells you, honestly, I don't think it actually tells you a ton. I think it tells you that it's Friday and people are tired and they're cashing out ahead of the weekend. That's one part of it. I also think that some of this has to do with the dollar, which you're continuing to see be stronger and stronger. On a day where you're not seeing a ton of volatility out of oil or bonds, I think that dollar strength is really an issue, especially for people who do want to cash out ahead of the weekend. And I will also add, next week, the last 5 days of the month, you will see a lot of rebalancing. So I also wonder, I don't know if this is true, but I also wonder how much of the selling is just getting ahead of some of that rebalancing.
I was thinking about, we're going to talk about this later with our TV colleagues, but the B of A strategists in U.S. equity flows, outflows just getting started. Like, I always find it's fascinating to watch fund flows.
Hey, Vince Signorella, come on in here. You're global macro strategist. You talk to a lot of traders. What are you hearing from them today?
Do we have Vince? There he is. Vince, start again. Go ahead.
Got me?
Yeah, we gotcha.
Story of two camps. We're seeing a lot of volatility from one day to the next because you have two distinct camps. One thinking sort of along the lines of where the Fed is, that maybe inflation is peaking and this is an opportunity to buy risk. On the other side, exactly the opposite, that inflation has a long way more to go and we should continue to be selling risk. And so we're seeing this chop on a daily basis, one day up, one day down, one day up, one day down. I have to say, though, net, the sellers seem to outweigh the buyers on an average basis. So it still is skewed to the downside, where traders are now, like one day to the next. Today, I think they're now pricing in 4 50 basis point rate hikes for the next 4 meetings, up from 2 just about a month ago, or even 1 a couple of months before that. So your real question is the market getting too far ahead of itself? And is this a great opportunity to buy, or is this legit and we're going to keep on going? I'm kind of in the camp that the market's a little too ahead of itself.
Yeah, it did feel like it, after a bunch of selling, really kind of bounced back in a strong way. And it does feel like it's kind of getting smacked down a little bit. Having said that, Creedy, there are individual gainers, but there's just a few out there. And I feel like a lot of it's often tied to an earnings story.
It's your job, Carol, hard.
It's fundamental. I had to hunt around for a few. But I mean, specific stories where investors are looking at the fundamentals. Look at the airlines. They've been on quite a tear as of late, so that is what I feel like is the outperformance here.
Yeah, and I think it's some company. I mean, listen, we've been talking about margins over and over and over again. How much longer can a lot of these corporations pass on those costs to the consumers? And in some pockets, they actually can, right? People are so desperate to travel, they are eating up those higher airline fares, which airlines then have to do to kind of offset the jet fuel costs, right? It's a similar story for Kimberly-Clark as well, for example, right? Your biggest indexed mover today, and that's going to be KMB is your ticker. It's up 9%, the biggest move, get this, in the last 20 years for Kimberly-Clark. This is the company that makes
one of my
Huggy diapers. Tune in, guys. A simulcast in a little bit. But it makes Huggy diapers. It makes consumer products.
And the duck masks that I wear each and every day.
Really?
I've done my part to support them. They're like $1.50 each.
Toilet paper, diapers.
Yeah,
right?
I mean but also think about it. These are products that people need and are willing to pay extra for. I mean, what are you going to do if you run out of toilet paper? You're not just going to not buy toilet paper.
And I'm going to put this to you. I mean, I remember when Aggie was little, we had certain diapers we bought, there were certain wipes we bought, and we didn't,
it's still like that in this day and age.
Variations, just stuck to certain brands.
But what's interesting is also, Kimberly-Clark talked about this in the earnings. They said they're also introducing lower priced products as well. And this is something that Kimberly-Clark has kind of, I don't want to say monopoly on, but a strong market share of diapers for multiple income brackets. So even the people who really are feeling that inflation pinch, Kimberly-Clark is apparently there for you.
All right, Vince, what are you keeping an eye on?
To be honest, the real market that I'm looking at is natural gas and crude futures. You have this continued argument of where you're seeing folks saying, again, as we spoke before, inflation, rates going up. But now you're starting to see some lowering of commodity prices. China demand has dropped considerably. If we start to see a drop in global demand and a drop in global growth, you have to ask the really hard question: do we still see inflation coming, and are we talking stagflation, which is a really ugly scenario, or is the market ahead of itself and maybe the rate structure is just across the curves just a little too fast and furious, and it should back off a little bit?
Yeah.
So hoping for the latter, but fingers crossed on that front.
Yeah, I think the China drawdown or the China weakness in their economy is a big one. By the way, crude WTI down about 1.7% today. Vince Signorella, global macro strategist at Bloomberg News. Creedy Gupta, markets correspondent. She'll be back later on.
And Nancy Lyons in Washington, D.C. with a check of the latest world and national news. Hey, Nance.
Thanks, Tim. Russia's nearly 2-month siege of the southern port city of Mariupol is all but over. Bloomberg's Mark Champion reports that is raising a new concern for Ukrainians.
Because they're in full control of the city, because there's no independent media there, they will be able to cover up war crimes that may have been committed.
Bloomberg's Mark Champion, among the war crimes being investigated will likely be whether Russia has tried to conceal a mass slaughter in the city. New satellite images show what appear to be mass graves, with locals saying as many as 9,000 civilians could be buried there. President Biden is spending Earth Day in Seattle, where he's expected to sign an executive order to protect national forests that have been devastated by wildfires, drought, and blight. Biden's order will direct federal land managers to define and inventory mature and old-growth forests nationwide within a year. Well, the airline industry wants Congress to come up with ways to create sustainable aviation fuel, and the Biden administration is on board.
Lawmakers proposed new legislation on funding for, plus tax credits to help transition to greener fuel. Supporters argue that could move the aviation industry toward the administration's climate goals while helping to curb energy costs by reducing the demand for jet fuel. Sustainable aviation fuels can be made from renewable biomass and waste. They have a lower carbon footprint than jet fuel. The Biden administration announced a goal of dropping aviation emissions 20% by 2030. In Washington, I'm Amy Morris, Bloomberg Radio.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Massar, Tim Stanovic, live in our Bloomberg Interactive Brokers studio right here at Bloomberg headquarters in New York City. So check this out. The New York City Department of Education suspending about 70 employees for allegedly using fake vaccination cards. This is coming from the teachers union.
The department placed the employees on unpaid leave with benefits effective April 25th, and a special commissioner of investigation for the New York City School District and law enforcement agencies are investigating the incident, Carol.
Yeah, here's what a spokesperson for the DOE said. Fraudulent vaccination cards are not only illegal, they also undermine the best line of protection our schools have against COVID-19, universal adult vaccination. Can I just say
it.
The whole thing about COVID, right? We've had to think about our community, right? You and I have thought about it. Like if we were exposed, I've thought about your family, you've thought about my family, and we've been really careful. Like it's constantly, you have to be thinking about your community, and we spread it out even wider when it comes to our colleagues here and wherever we go. And like that's what this is about, and this is kind of reckless and careless.
Yeah, I mean, look, I'll be honest. You know, as the pandemic has ebbed and flowed, you and I have had discussions about, you know, you'll have plans for the weekend and you'll say something like, do you mind if I, you know, would it be okay with you if I did this? Or before you and I travel, you know, we'll talk about, is this the type of thing that we want to do right now? And, you know, usually the answer is yes.
And we know it's not always easy for everyone to do this, I guess. But I mean, this whole thing has been about thinking about everybody else and what you might expose someone to and just thinking about your community. So the idea of using these are allegations, fake vaccination IDs. You're smiling with it.
Well, I just want to remind people that the Commissioner of Health and Mental Hygiene mandated inoculation for all DOE staff back in September. Students are required to be vaccinated in order to participate in high-risk extracurriculars such as chorus and band. And then some staff have contested these allegations according to a letter sent to the department by the United Federation of Teachers. That's the city's teacher union. The DOE, Carol, says that a total number of workers suspended is less than 100.
And the union did ask for the suspension notices to be rescinded, threatened legal action to potentially challenge the DOE's unilateral action in removing these employees from payroll. So a little back and forth there. We're going to talk a little bit more about the latest in COVID. Really, those questions about mask on, mask off, what's going on, some clarification that's coming up next on Bloomberg.
is Bloomberg Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Disappointing earnings, sending stocks lower. In fact, right now we are just about at the lows of the day. Right to the numbers. Steep losses for the S&P, down 91 points now, down 2.1%. The Dow down 700 points, down 2%. NASDAQ Composite Index down 257, a drop of 1.2%. We also have the NASDAQ 100 Index tumbling as well. That index now lower by just about 2%. 10-year yield, right now we've got the 10-year 2.91%. Spot gold is lower by 0.9%, 19.33 the ounce, while West Texas Intermediate crude oil down 1.7%, 101.97 a barrel. Lots of focus on earnings today, but Kimberly-Clark posted first quarter sales and profit that did beat Wall Street's estimates, even as the maker of consumer products grapples with persistently rising costs. Shares of Kimberly-Clark up now by 9.3%. Again, recapping, stocks lower, S&P down by 2%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. Appreciate that update. Charlie Pellet there with a Bloomberg Business News Flash. Well, we've been talking this week about Philadelphia scrapping its indoor mask mandate less than 2 weeks after reimposing it. We heard about that, I think, last night. Meantime, earlier this week, you had a federal judge of Florida throwing out a mask requirement for air and train travel. The Justice Department then following up saying it's going to appeal that ruling, setting up a court battle, or expected one, that could extend past the midterm elections. It's political. It's not
what
just
are we
science.
Supposed to do?
I don't know.
Let's ask somebody with a background in science.
That's a good idea.
Medical doctor, in fact. Dr. Ian Lustbader, clinical professor of medicine at NYU Langone's Medical Center. He joins us on the phone from here in New York City. Dr. Lustbader, it's been some time since we've spoken. How are you?
Happy Friday, Carol and Tim. Tim, I think you scared the markets today.
My bad.
Something must have happened, but we'll reassure them, and they'll come back by the end of the day. Don't worry.
Well, help us make sense of what's going on when it comes to whether or not we should be wearing masks, when it comes to train travel, when it comes to planes, and when it comes to automobiles if we're in an Uber with somebody.
Yep, we're definitely seeing a little bit of a rise in COVID cases. I'm certainly seeing that in the office. And there are really a lot of questions with patients about, what do I do? Do I have to, go to the hospital? Should I take medication? And we do have, for vulnerable people, Paxlovid, quite available, at least in New York, which is 3 pills, antivirals, that are taken twice a day for 5 days. So we definitely have available treatment. Some monoclonal antibody, but the Paxlovid does seem to work fairly well, Pfizer product. But most people who have no underlying illnesses are doing fairly well. We're also seeing in the news big debates about should you take a 4th vaccine. We're getting a lot of phone calls about should I take a 4th vaccine or not after the 3 boosters. And questions about masks. And I think I wish life could be black and white, and I think the CDC and politicians and would love black and white answers, but sometimes it's not that way. We definitely know that masks are somewhat helpful in preventing transmission of droplets. When you cough or sneeze, these big droplets are reduced. And it's interesting, even back in 1918, the Spanish flu, there were big debates. After a couple of years, people were getting angry. They didn't want to wear cloth masks. They knew about viruses, no electron microscopes, obviously, not until the 1960s, but people were spitting on the street and so forth. So there was a big debate. People don't like to be restricted. If you're vulnerable, if you have diabetes, if you're obese, if you have lung disease, if you have underlying immunosuppression, it does make sense to wear a mask because it may provide some protection. N95 masks, much better. Now, obviously, there's sort of a social signaling that, if you are not well, also, please either don't travel, or if you're not sure, it would be great to wear a mask. That's completely different than a mask mandate. In other words, forcing people to wear a mask if they don't want to. I think that doesn't work. People don't always wear the mask correctly. They're in a plane, they take it off, they're eating. So I think making people do it is much more political. But if you are vulnerable or if you want to be kind to others, certainly wearing a mask and a well-fitting mask makes sense. We can talk about vaccines and the whole debate about the fourth shot, if there are questions about that as well.
What's interesting, too, what I kind of read into Philadelphia, I thought, how great. When they saw some problems, they said, okay, we're going to say mask mandates back on. 2 weeks later, they're like, things are better. Let's take it off. Like, we understand the tools, right? We've had an education over the last couple of years, Ian, in terms of how to deal with this pandemic. And to me, like, yay, good. We understand if there's a problem. Let's do this, and let's quickly get it under control. I mean, that's what this is about, right?
I wish we could get it under control just by simply saying everyone wear a mask. The reality is most people transmit it when they, even if they're feeling okay, they're passing it along, and then 5 days later they're congestion, sore throat, cough, and then they're, oh my gosh, I better take something or do something. But I do think there is no downside. Look, we know certain groups like kids in elementary school need social cues, making those kids wear masks. They basically are healthy, they do well. I'm not sure if the risk is worth the benefit, meaning the teachers are probably worried about getting sick. But we do know that kids have suffered with intellectual and academic delays, social cue delays. So I think we have to target it specifically. But there is no harm if there is a surge to tell people, look, for the next 2 weeks, we're going to wear a mask. How much of an impact that's going to make, we don't really have a lot of data on that kind of turning this thing on and off quickly. How much does it really drop? Again, it depends on what are the masks, how tightly they're being worn, what kind of mask. But I think it's a reasonable effort, and it's certainly not a big pain to do as long as you're doing it for a specific amount of time. We're seeing vaccine fatigue and mask fatigue. It's been 2 years, and many people are psychologically stressed by, oh my God, more to go. That's really the issue, and it's not scientific. It's really more political and psychological.
Hey, just 15 seconds. Did you get a fourth vaccine?
I did not get a fourth vaccine. We can talk about that. The CDC is questioning which people really do need it.
Okay.
I am giving it to selected patients who are traveling, patients who have underlying disease.
All right. Great to get an update with you. We covered a lot. Dr. Ian Lustbader, clinical professor of medicine at NYU Langone, on the phone in New York City. Would you get a fourth one?
If the CDC came out and recommended it for somebody, within my age group and demographic and, health info.
Yeah, agreed. All right. More to come. We're just getting started on this Friday. You're listening to Bloomberg Business Week on Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed. This is Bloomberg Business Week. Carol Massar, Tim Stanovic, live in our Bloomberg Interactive Broker Studio. We are streaming on YouTube on this Friday. Coming up, you caught this story early on, sent it to the team, and you're like, this is wild. And
Yeah, we're looking forward.
You actually know people, right?
No people, no managers who say that their employees are using this benefit. We're going to tell you all about the new must-have benefit that's looking less like a novelty perk and more like companies in this tight labor market have to offer it. We're going to speak to Olivia Rockman, U.S. economy reporter, in just a few minutes.
All right, first up, let's get back to the markets. A sell-off, certainly on the equity side. Hey, Charlie Pellet.
Indeed, we have got stocks falling to earth, perhaps, on Earth Day with the Dow, the S&P, NASDAQ all declining right now. We've got losses in the S&P down 2.2%, just about the worst level of the day right now, lower by 96 points. The Dow down 752, down 2.2%. NASDAQ down 273, drop now of 2.1%. The NASDAQ 100 index also down 2.1%. Russell 2000 tumbling by 2.2%. Disappointing corporate results and prospects for aggressive interest rate hikes certainly weighing on sentiment. 10-year yield 2.90%. Spot gold down $17 the ounce right now, down 0.9%, $19.34 the ounce. West Texas Intermediate crude oil down 1.6%, $102.10 a barrel. Singapore has downgraded the crisis level of the pandemic, scrapping all tests for incoming vaccinated visitors. Hong Kong opening to non-residents beginning next month. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health, and he says in the United States, mask rules have suddenly gotten a lot murkier.
You know, the problem really becomes public health doesn't want to remove interventions too early. They need to instill them early, though, if there is a surge. And so we're in this gray area now where different public health individuals are making their calls based on local conditions. And sometimes those calls are not black and white.
Dr. Andrew Pekosh with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Pfizer shares down 1.9%. Its German partner BioNTech, its ADRs down 1.6%. AstraZeneca down 1.8%. Moderna's tumbling 2.2%. Johnson & Johnson down now by 0.3%. Recapping 10-year yield 2.90%. Stocks lower across the board. Big sell-off underway with the S&P down 97 points, now lower by 2.2%. And that's a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar along with Tim Stanovic. So yesterday, we heard Fed Chair Jay Powell talk about the overheated labor market. We're also going to hear from Janet Yellen a little bit later on, also talking about what's going on in the U.S. labor market. So at a time, Tim, when companies will do just about anything to recruit and retain workers, there's an interesting benefit that has gone from a novelty to a must-have for many companies.
We're talking about egg freezing. It's something that Olivia Rockman writes about. She's U.S. economy reporter for Bloomberg News. She joins us on the phone from New York City. Olivia, I saw this story and I thought to myself, this is amazing timing because I just chatted with a friend of mine. She's a manager. She oversees a team. She works at a company that covers egg freezing, and she was telling me how many women on her team are taking advantage of this. It's just on a scale that she's never seen before. What does the data tell you about the increasing number of companies that are offering this as a benefit?
Yeah, before the pandemic, these types of benefits were really just central to Silicon Valley companies that are always kind of trying to get ahead in the compensation space. But since the pandemic started and we entered into this really tight labor market, companies are trying to do anything to retain and attract employees. And so we've seen the percentages really of companies offering this go from just about a fourth before the pandemic to nearly 40% now.
So how many companies are doing this?
It's mostly concentrated in larger companies that have more than 500 employees. And it was really just the tech industry prior to the pandemic, but a lot of the CEOs of these fertility companies that I've spoken to say they have clients that are labor unions, municipalities, the steel industry. It's really broadened out beyond just tech.
I remember when this was first announced back in 2014, when Facebook said they would do it, when Apple said they would do it, because it made a lot of news. And what's interesting is it was seen by many as this really kind of a benefit that is really expensive, because this process can cost tens of thousands of dollars, as you write about, Olivia. But I noticed a nugget in your story that I thought was really interesting. It was the fact that companies are only paying this out if their employees use it, and very few actually do. According to the benefits provider Mercer, less than 3% of women might need treatments such as this. So is it costing the companies a lot to actually offer a benefit that looks very expensive?
It isn't. Most companies say that this isn't really increasing their overall medical benefit costs. And one of the reasons, like you said, is because a small segment of people use it. The other reason is the structure that many companies use is a lifetime benefit of roughly $15,000 to $25,000. And in the large scheme of a company's cost, if only 3% of people are using $25,000, it's not going to cost that much. But on the flip side, they can advertise it as this great benefit. And so it's sort of a big win for the companies.
Is it covered? How is it covered? Is it part of an insurance plan that the company offers? Or is it completely separate and it's like you get tens of thousands of dollars, but perhaps once in a lifetime for a procedure like this?
Depends on the company, but what we've seen pop up a lot are these sort of startup fertility companies. Maven Clinic is one, Carrot Fertility is one. And they partner directly with companies outside of a traditional medical plan. And that's the way that these companies can offer a set amount of funding for this treatment.
What I find is really interesting, and American companies have come under so much criticism, I feel like, for many years about when it comes to maternity, paternity leaves. I do feel like not the floodgates are opening, but there is kind of a more wider embracing of family matters when it comes to companies maybe coming off of the pandemic. Is that true?
It's true in some cases, but one of the sources that I spoke to for this story, and this isn't included in the story specifically, but she mentioned that it's great when companies offer a fertility benefit and help people start families, but at the end of the day, if they're not offering a good leave plan, if they don't have childcare, et cetera, that employee that used the fertility benefit might not stay because it's not a holistic approach. And so it really takes supporting families through the entire family building process for this to really work as a retention tactic.
Does it seem like the companies that are offering this benefit are ones that have those associated family leave benefits?
The ones that were early to the game are. So when you look at Microsoft, for example, Apple, those companies do have pretty solid leave plans. But some of the companies that are newer to this space still have more work to do on that front.
I have to say, as a woman, like I have a lot more conversations with women about that, just that it's in their psyche a little bit like, okay, well, if this doesn't happen, maybe I'll just freeze my eggs and just be safe and play it safe. So I feel like it's a conversation maybe 10 years ago we didn't talk so much about, but we certainly do now. Olivia, great story, among our most read. Olivia Rockman, she's U.S. economy reporter at Bloomberg News on the phone in New York City.
Well, let's get to Washington, D.C. now for a check of the latest world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. It is unclear what the fallout will be to an audio tape posted by the New York Times and that aired last night on MSNBC. You hear Congresswoman Liz Cheney and House Minority Leader Kevin McCarthy discussing the fate of President Trump shortly after the January 6th insurrection.
Is there any chance, are you hearing that he might resign? Is there any reason to think that might happen?
I've had some few discussions. My gut tells me no. I'm seriously thinking of having that conversation with him tonight. I haven't talked to him in a couple days.
McCarthy also said on the call with GOP lawmakers that President Trump had acknowledged that he had some responsibility for what happened. Well, the Biden administration is sending more aid to Ukraine, including powerful howitzer artillery. And some say more weapons will be needed and the U.S. should not hesitate.
The North Atlantic Alliance should step up its aid to Ukraine without exaggerated fears of escalation. former White House advisor Alexander Vindman said in a Bloomberg interview.
Russia has zero interest in a confrontation with NATO. They'd like to point to NATO as the belligerent. NATO is the one that's attacking them. We should be providing Ukraine with more advanced weapons so that they could end this war quickly. If Russia runs out of troops, runs out of tanks, runs out of planes, that's how this war ends.
Vindman backs a Lend-Lease plan that has passed the U.S. Senate to pre-position military equipment in Europe that Ukraine can draw upon as its needs arise. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much, Nancy Lyons in our 99.1 newsroom in Washington, D.C. So a former investor in the National Football League's Minnesota Vikings will plead guilty to fraud over an unlicensed banking operation for cryptocurrency traders, his lawyer telling a federal judge.
Reginald Fowler will enter an open plea. That means he will plead without having reached a sentencing agreement with prosecutors. Attorney Ed Sapone told the court in a filing late Thursday. This in federal court in Manhattan. Carol, he will plead guilty to wire fraud and conspiracy to commit bank fraud and operate an unlicensed money transmitting business.
So it turns out Fowler had rejected a deal with prosecutors that would have allowed him to plead guilty to a single count. Under that agreement, the government had required him to give up as much as $371 million held in more than 50 accounts.
When I saw that number, my mouth fell as well. Prosecutors, so here's what happened, at least what prosecutors are alleging. They're alleging that in a February 2020 indictment, the Arizona businessman told banks that he was opening accounts for real estate transactions when he knew they would be used to move funds for cryptocurrency exchanges. The arrangement shunted hundreds of millions of dollars through the U.S. financial system and allowed the exchanges to avoid money laundering safeguards that apply to licensed financial institutions. That's according to the government.
All right, so he was also charged with defrauding people associated with a professional sports league by trying to buy a stake in the league using illegally obtained funds. Though prosecutors didn't identify the league, the timing and details do match up with Fowler's reported investment in the Alliance of American Football. That's an upstart rival to the NFL. We've talked about that on air. It did shut down, though, in April 2019 after only 8 weeks of play.
Fowler tried to buy the Vikings back in 2005 for $600 million, but settled for minority ownership when he couldn't come up with the cash. His involvement with the team, that ended back in 2014.
So basically this open plea means he gets to keep the money?
I don't know.
Is that why he didn't do?
He'll plead without having reached a sentencing agreement with prosecutors, so he doesn't know what the sentence is.
That's interesting.
Yeah.
Yeah, because he had rejected some other deal, right, that would have required him to give up a ton of money. Man, this crypto world, we're going to talk a little bit about it later on in the world, about it maybe being a kind of a safe haven akin to gold, but we'll get into that a little bit later on. You're listening to Bloomberg Business Week on Bloomberg Radio.
Ladies and gentlemen.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Low and going lower. We've got the Dow Jones Industrial Average now down 788 points, just about the low of the day right now, down 2.3%. The S&P's tumbling 100 points, down 2.3%. NASDAQ down 282, lower by 2.1%. Got to keep it locked into Bloomberg Radio for the latest on these fast-moving markets here. Sell-off continues. We've got the 10-year yield, 2.90%. Spot gold down $18 the ounce to $19.33, drop there of 0.9%, while West Texas Intermediate crude down $2 a barrel, 101.78 right now on WTI, lower by 1.9%. Stocks are falling, familiar themes, disappointing corporate results and prospects for aggressive interest rate hikes. Verizon among the companies moving lower after earnings. Verizon shares are tumbling now by 5.7%. American Express after earnings down now by 2%. Steepest losses, though, HCA Healthcare, this stock plunging, having its biggest drop in 2 years after the hospital operator indicated that higher labor costs will carve into its financial results this year. HCA down now by 20.9%. Recapping stocks lower, a 100-point loss right now for the S&P, down 2.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. This story, another one that's among our most read on the Bloomberg, is about the addicted crypto trader that went to rehab to kick the crypto habit.
The story by Charlie Wells and Ms. Elena Igafopoulou. Ms. Elena Igafopoulou joins us now. She's personal finance reporter for Bloomberg News. She joins us on the phone from New York City. Joel Weber is editor at Bloomberg Business Week. He joins us on the access line from Brooklyn. Joel, I started reading this story this morning, and I thought to myself, of course, when we're talking about crypto and the idea of people buying it, selling it, holding it, being obsessed over it, it might be like any other addiction out there.
Yeah, I mean, the moment that I saw a drive to this story, it just was like, oh, right, this would totally make sense.
Exactly.
That something that is always on, is always at your fingertips, and, you know, for the past few years when you've had nothing else to do when you've been home, like, it's just there waiting for you. It sounds like it could become a demon, and according to Missy and Charlie's reporting, that's sort of what it seems like it's become. And of course, you know, there's a huge kind of addiction support network, and that's sort of where this story ends up leading in part. So Missy, would you all learn while you were reporting this?
Having me on. So I think the question that we really wanted to answer when we started looking at this topic was, can people get addicted to crypto? And when we started reaching out to treatment centers or rehab centers for other addictions, it just was so clear that they were saying this is something they've seen on the rise in the past 3 years. 3 years here being the key word, because as Joel said, it was sort of a byproduct of the pandemic, right? And people staying at home, having a lot of free time. But when you sort of take apart what crypto trading addiction actually is, it sort of has those same feelings that you could potentially find if you're gambling. So a lot of highs, a lot of lows. There's a lot of volatility in these coins, and those ups and downs to sort of really cater to those feelings, but also the accessibility. Again, what Joel mentioned, which is you really just need your smartphone, and these markets are 24/7, right?
Yeah, they are. And you know what was so fascinating about the story, Missy, is that there's a range of treatment options. There's telehealth, you know, which are relatively cheap, as you write. But then there's also this $90,000 a week Swiss clinic that offers rehabilitation here. How does it run the spectrum? How does it run the gamut? What's at the high end and what's at the low end?
Yeah, so we actually visited that treatment center that you're talking about. It's in Lake Zurich, and that's sort of for the, you know, tip of the top, the wealthy people that can spend that amount of money. And what it sort of looks like is you go into the clinic and you spend 3 to 4 weeks there with sort of 3 psychotherapists who sit you down and essentially try to better help you understand why these emotions are coming out every time you trade. You sort of have to close yourself off from the world, no cell phones, no access to the markets, and that's sort of like a way for people to face their addiction. But we also, spoke to other sort of freelance psychotherapists who are in Thailand, and they're dealing with people one-on-one. There's another one in Scotland in a castle that again is a rehab center that has people come in and sort of try to disconnect. And it's not even abroad. Even here in the U.S., we spoke to a clinic which did not make it into the story, but it was in Maryland, and it was a substance abuse clinic. And a lot of the patients that were going into the clinic for substance abuse were, again, experiencing these sort of addictive emotions for cryptocurrencies. And so we're seeing it across the board, Tim.
Hey, Missy, is it all about the rush? I'm curious what therapists say and psychologists or psychotherapists. What do they say about it, and how easy is it or not easy to crack this addiction?
Yeah, I think, as with any behavioral addiction, it just takes a long time. It takes a lot of therapy, and it just really comes down to whether a person sort of really wants to help themselves. I do think that a big problem with cryptocurrency trading particularly is this quality of FOMO, right? The fear of missing out. And that's something that we've been talking about when it comes to meme stocks, meme coins, and cryptocurrencies in the past 2 or 3 years, as we've seen this sort of discourse online about these cryptocurrencies really take off. You're seeing people hear stories of their friends or their neighbors making money really quickly through cryptocurrencies. And I think a lot of people just can't shut that noise down. And so in that sense, I think it's becoming sort of a little bit more difficult to avoid the temptation because it's everywhere, it seems like.
Well, and as you and Charlie write, there's 3 things that really set cryptocurrencies apart in terms of the addiction qualities, right? The first is this novelty element. The second is the volatility. And then that third is this air of legitimacy that it has. Why is that so dangerous?
Yeah, totally. I mean, I think that, we can bring in examples of meme tokens, right? Let's look at something like Dogecoin. I mean, that is a coin that, started as a joke and essentially became one of the coins that's now traded in, brokerages across the world and some in the U.S. And so I think that's a very good example of how, it was these were coins that had a very speculative nature to them, but they've taken on an air of legitimacy because they seem to have become these, undoubtedly big part of the investing strategy of a lot of people. And so even though they're volatile, even though they're sort of kind of dangerous, for the average portfolio, they're still just traded freely on the markets. And so they're sort of, considered normal. And I think that is a big problem when it comes to how regulators are also looking at the industry and saying, what are the byproducts and effects that these are having on the mental health of people. And, we're still so early on when it comes to these cryptocurrencies. I think it's going to take time.
Hey, Missy, just in the last 30 seconds that we have with you, what did you find about the efficacy of these treatments? Like, how are these folks doing who have gone to rehab in order to try to kick this habit?
I think one of them was in rehab and is sort of working on it. The other one says they had to, quit cold turkey and never look back. I think that, this is a moment in time where it's still so early and people really just need to start studying what the best way to go forward with this is. But I can tell you it's not easy, Tim. I mean, I think people really just need to have a lot of restraint in order to not jump back into these markets again because they are so accessible, because they seem to be permeating everything.
I thought it was interesting, too, how some arrive at treatment centers for alcohol or drug abuse, and then they find their crypto problems kind of unearthed later on. A really fascinating story, among the most read on the Bloomberg terminal. Missy, thank you so much. Our thanks to Missy. She's personal finance reporter at Bloomberg News, along with Joel Weber. He's the editor of Bloomberg Business Week. Catch Joel, me, and Tim on our Bloomberg Business Week weekend show. Lots of discussions about stories in the magazine. That's on Saturday at 8 a.m. And, of course, catch it on our podcast feed as well at Bloomberg.com. Carol Massar, Tim Stanovic. This is Bloomberg Business Week on Bloomberg Radio.
the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. 60 minutes left here in the trading day and in the week. Romaine Bostic here, Taylor Riggs here, Caroline Hyde still out, Sonali Bassick in, Carol Master and Tim Stenevec joining us right now as we welcome our colleagues across all of our platforms, all of our viewers across, I should say, over our Bloomberg TV, radio, and YouTube for our global simulcast here. And Carol, I'm a little tongue-tied here because I was just looking at kind of some of the superlatives here. Don't worry, I'll dominate this conversation. But when you look at some of the superlatives on the day, Carol, and this turnaround that we've seen in the market with the S&P down 2.5% here, the S&P now down 10% from its all-time high. Once again, more than 95% of the S&P 500 on this day, at least, are in the red. First time we've had a day of 90% plus of the names in the red going back to November of last year.
That's a big-time negative sentiment. So, you do wonder, does that mean we're going to go down even more, or does it mean that it's overdone at this point? That's going to be one of the big questions. One of the things I've been focusing on, speaking of negative sentiment, WTI crude is on track for its third weekly loss out of 4. It's down about 8% since March 25th, I should say. But we know what the story is. We're watching that Chinese demand drop. It's expected to be down about 20% this month, according to Chinese insiders. So really worried about what their drawdown or lack thereof on crude and how that's really creating a lot of weakness in this market.
Yeah, speaking of weakness, the risk-off mood and the risk-off trade extending to crypto today. Bitcoin underperforming, though not as much as it was earlier, down 2.7% as we speak, hitting its lowest levels in a month, trading just above 39,400 right now.
Well, take a look at the majors like we've been talking about. Some pretty significant weakness on the day and on the week. Everything's down at least 1 to 4% or so on the week. Sonali, you really see this play out on a day like today. You have the Dow and the S&P 500, each off 2.5%, and those are the laggards. Technology, it's a little bit of an outperformer, but really not by much.
Yeah, and if you look inside the S&P, Taylor, let's talk about the sectors that are doing most poorly on this down day. You have S&P Materials down 3.8% nearly. Healthcare down 3.4%. Communication services down more than 3% as well. The ones holding up a little bit better, utilities and consumer staples, but those are still more than 1% in the red.
Well, consumer staples, that is your bright spot. 22 stocks in the S&P 500 are higher on the day. That's it, 22. The leader of the pack is Kimberly-Clark. Those shares up 9% on the day. A lot of commentary, of course, coming out of their report. I guess we all keep buying toilet paper and diapers no matter what the economy looks like here. You take a look at some of the other movers. Dow, which I thought was an interesting story here. I had actually put this on the board because it was actually setting up for what was going to be its longest win streak, up for a 10th straight day, but that 9-day win streak coming now to an end here. Dow down about 1.6%. Eli Lilly on a 9-day losing streak. Those shares down about 4% here on the day. And an interesting setup here for Autoliv and the rest of the sort of auto parts makers. They came out with their earnings, and I thought the commentary was interesting, guys. The shares down 7%. They talked about this idea, not so much that they're having trouble getting parts and the costs, which they are, but they said it's really kind of the second second order effects of the car makers not really being able to keep pace with the production because they can't get steel and other things. So they got no reason to order seat belts and airbags from a company like Autoliv until they get that worked out. So the disruptions in the supply chain still there. The company says it's not quite sure when this is going to clear up. It's hoping maybe in the second half.
Those are always not the second or third or fourth derivative effects that we immediately think of. Romaine, I wanted to show this. This is the VOO. This is the Vanguard S&P 500 tracker, that ETF. B of A coming out with a really interesting note saying that equity flows are just getting started. You just had one of the, I think, the most on record, biggest outflow from that VOO on a weekly basis. I think what was interesting is that B of A strategist Michael Hartnett said that everyone is bearish, but redemptions have just started.
Well, for our radio audience, when you see a chart of that extreme with all that money coming out, and in all seriousness though, but a lot of people will look at that and say, is that a contrarian signal?
But look at the other extreme moments, right? We've had extreme moments, and then all of a sudden you see investors rushing back in because they see opportunity. And Vince Signorella, we caught up with him earlier, and he talked about this kind of yin and yang that's going on in the market. Some people who think we're overdone with some of the selling, and so they see opportunity. Others who think, no, we've got lots more downside to come. And you see that play out in a chart like that, where we see kind of an oversold market, and all of a sudden investors come rushing in.
What does Janet Yellen think?
What does Janet Yellen think? Well, you guys played a little bit for your television audience, and we have a little bit more because she caught up, of course, the U.S. Treasury Secretary, former head of the U.S. Central Bank. She caught up with our David Weston and talked about soft landing inflation. Here's some of that information, that conversation.
The Fed is concerned about inflation. They've made clear that they will be removing accommodation to try to get it under control. But I know they'll try to achieve a soft landing, and with some skill and some luck, we'll have a very good year for the U.S. economy in terms of the job market this coming year.
U.S. Treasury Secretary Janet Yellen, of course, former head of the U.S. Central Bank, talking with David Westin. You guys played some. We're going to play some at 4:30 Wall Street time for the radio and YouTube audience. But the thing is, when she talks about, soft landing, recession, avoiding it, this is not an exact science. And this is something we have to keep remembering as we kind of dissect Fed policy. They're going to try and make the right calls, but it's not perfect.
Yeah, speaking of calls, it's been incredible to watch the calls around what the Fed is going to do, not just at the next meeting, but in June and July, change just in recent days. I know you all saw that Nomura note that now says it's expecting the Fed to lift interest rates by 75 basis points at June and July meetings. So talk about a shift in the way that analysts are thinking about this. Very aggressive.
Tim, well, I love that one of the notes in B of A was 75 is the new 25.
Incredible.
And maybe not 75
soft,
every
how do you
meeting,
have a
but
soft
it's more
landing
than
with that?
25. It could be 50, as you have a Federal Reserve that's really trying to map out a path forward that's aggressive.
And it gets to the idea, we talk about that neutral rate, where the Fed ends up. And then now you have a market that is actually pricing in what? 200 basis points, basically 2 full percentage points over the next 4 meetings here. The idea here that by the time we get to the end of the year, we'll be at that neutral rate a lot faster maybe than some people expected. Maybe that's a good thing for the Fed. I don't know. Certainly in the short term, that's not going to be a good thing for the market. But I think a lot of people want to know not just how many rate hikes we get, but how fast we get to them and how fast we come to an end.
Yeah, what is a good thing anymore? That is a great question, Romaine. If you look at the market, the declines are a good thing for some people who want to be spending some money at these lower valuations. You see it in private equity, but the VIX going up like that, I'm not sure that that is a good thing. Once that starts to happen, and if it happens at a greater rate, you start to stifle capital markets activity again, and that's investment
Hey,
right
Tim,
there.
we got a big week coming up next week.
Yeah, we
a
got
lot
some
of
earnings coming, right?
A lot, like 180 companies out of the S&P 500. I mean, what's that going to do for the market? I mean, obviously, some of those companies will do well, but my guess is there's going to be a lot of agita as people try to dissect how these corporate earnings are holding up.
Okay, so the question is it going to be a Netflix story with these companies, or is it going to be a story of a company like Procter & Gamble or the airlines that we saw that are able to weather these price increases and pass along those operating costs that they're seeing increase to consumers, and also get a good idea of the consumer? Hey, we got a good idea from the consumer from Amex earlier today that they're getting out there and spending still.
All right, so more earnings to come. Hey, we're going to continue this conversation. Got lots more to come in less than an hour's time. Our cross-platform coverage on radio, TV, and YouTube. Beyond the Bell. We're going to count you down to the close, wrapping up the trading week and wrapping up this Friday. We'll see you then.
This is Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
With Tim Stenovic here in our Interactive Brokers studio at Bloomberg headquarters in New York City. Equities hovering near their lows of the session, so definitely risk-off trade. We see those yields continuing to stay higher, but it's very much broad-based selling when it comes to the equity trade.
Yeah, I like using a function on the Bloomberg terminal to go back and look at how things were, how things are compared to how they were. We're seeing the S&P 500 right now at its lowest level, Carol, since March 15th of 2022. We're significantly off of the highs from just a couple weeks ago.
Well, and it's interesting. I want to go back to what Vince said. Vince Signorella, Global Macro Squawk Box. That whole idea, and you see the tension in the market, the volatility, where one day we are rallying, one day we are not. And it's whether or not you believe we've hit bottom, certainly on the equity trade, whether we've had top when it comes to yields, and that there's some that think we have, some that think we have not. And that's why you see the kind of big swings that we get in the market.
Yeah, it was really interesting what Vince said. He said there's these two schools of thought, right? Those folks who think that inflation is peaking, so is it time to buy risk? Or are the people who are, thinking that there's still more room to go lower, are they the ones who are right?
Right. He said for some that think inflation's going to head higher and they're selling. So right now he said the sellers are outweighing the buyers. He said in general, you're seeing that trade. And that's why volume is important on a day like this. Watch the conviction behind that trade on the individual indexes, but whether or not you're seeing a lot of people kind of jump into that trade or a lot kind of holding back at this point.
What happens next week?
I don't know. A lot of earnings, though.
Yeah.
For us to play with.
Let's get to Washington, D.C. now for a check the latest world and national news. Standing by is Nancy Lyons. Hey there, Nance.
Thanks. Thanks, Tim. President Biden is marking Earth Day in Seattle. He's taking action to restore national forests that have been devastated by wildfires, drought, and blight.
I'm signing an executive order to conserve our forests that do so much to protect us. You know, our forests are our planet's lungs. They literally are recycling and cycling CO2 out of the atmosphere. That's what they do.
Biden's order calls for the federal government to conduct the first ever inventory of mature and old growth forests on federal lands so that the government can develop strategies to make them less vulnerable to climate change. House Republican leader Kevin McCarthy has denied a New York Times story that he talked about urging then-President Trump to resign in the days after the January 6th riot. But that was before the Times released a tape in which McCarthy can be heard saying he would encourage Trump to step down. Bloomberg Government's Emily Wilkins reports this raises one big political question.
How does Trump respond to this news? Does he go after Kevin McCarthy? Because if he does, that might mean that we'll see someone else become Speaker next year if Republicans win in November.
BGov's Emily Wilkins reports the tape came from a phone call between McCarthy and Congresswoman Liz Cheney. A spokesperson for the Wyoming Republicans says Cheney did not record or leak the call. Philadelphia has reversed course and has ended the mask mandate that it reinstituted Monday. The city health director says the decision was made due to decreasing hospitalizations and a leveling of case counts. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. So some people buy stocks, some people buy real estate, some people buy art, some people buy crypto, some people buy diamonds.
Yeah, I was wondering where you were going with that. Sometimes some people buy more than one diamond. The diamond world is scrambling right now to keep buying Russian gems. U.S. sanctions on Russia's giant diamond miner are causing chaos throughout the industry, leaving traders and manufacturers hunting for workarounds to keep tapping one of the world's main sources of precious metal. This story among the most read on the Bloomberg terminal.
It is among the most read. What's interesting, we've talked about this a lot since this unfortunate war, this Russian invasion, Russian war with Ukraine. We've learned about IT in Ukraine. We've learned about, if you didn't know it before about Ukraine, right, that area being kind of the wheat basket to the world,
I was going to say
the grain basket to the world.
Grains. We've learned about technology, and of course, everyone's seeing the effects of energy.
Yeah, exactly. And so here we are, another story that plays into that. So buyers across the big trading centers in Antwerp and Dubai and manufacturing hubs in India have spent the past 2 weeks consulting lawyers to determine what the U.S. sanctions on Alrosa PJSC mean and how they can continue to buy, according to people in the know. In the meantime, diamonds have stopped flowing from Russian mines to Surat. That's the world's diamond cutting epicenter because Indian banks are unable or unwilling to process payments.
Let's talk a little bit about Alrosa, that company you mentioned. It's effectively state controlled. The federal government owns 33%, and another 25% is held by local authorities. Losing its supply over a longer period would be seismic for the diamond world. The company accounts for about a third of global supply of rough stones. That's about the same level as De Beers, which had a monopoly until the start of the century. It's incredible to see the growth of the Russian diamond industry when you look at it in the context of De Beers.
Right, exactly right. We always think about
De Beers
them
being the one in control.
Exactly. And I'm assuming it's jewelry, but I'm assuming it's also for industrial usage as well. But maybe that's a bad assumption. But nonetheless, we did see rough diamond prices begin to weaken last month as inflation concerns started to hit consumer confidence.
I just want to have, on this subject, a redhead crossing the Bloomberg terminal right now. U.S. officials renewing push to sanction billionaire Roman Abramovich.
All right, you're listening to Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Down day for the Dow, the S&P, and NASDAQ, and that is putting it mildly. Let's head right over to the first word breaking news desk for today's afternoon call. Here is Bill Maloney.
And good afternoon, Charlie. U.S. stocks are plunging today on earnings and rate hike jitters. Dow's currently down 722 points. S&P's dropped 92. NASDAQ is lower by 255. The U.S. 10-year yield at 2.9%. Gold is down 19. Oil is also fading. And Bitcoin is lower by 2.8%. Among the main 11 S&P sectors, all were in the red, led by losses in materials, telecom, and healthcare. And all the stocks in the Dow were also in the red, led by 6% declines in Caterpillar. After earnings, Verizon fell 5%. And in deal news, in the gaming space, Ubisoft is said to draw buyout interest. Wrapping things up, Fed swaps are pricing in a fourth half-a-point rate hike in September. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg Type Squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. Well, earlier we highlighted one of our most read stories on the Bloomberg about the crypto trading addict that went into rehab. We've got more on the world of digital currencies. There's so many stories and so many different aspects when it comes to digital currencies.
Joining us now is Andy Edstrom, Managing Director of Advisor Services at Swan Bitcoin. Swan Bitcoin, it's a platform. It's a financial services platform. It helps people purchase Bitcoin, sort of similar to a savings account. Andy, good to have you with us. How are you?
I'm great, Tim, and thanks, Carol. Thanks for having me.
It's good to have you with us. You know what's interesting? Increasingly, we're seeing Bitcoin correlate to U.S. tech equity, the Nasdaq, and I'm wondering how you explain that. If this correlation is warranted in the idea of risk on versus risk off, because I know that you argue that this should be sort of a haven.
Yeah, so Bitcoin is about 13 years old, as you know, and maybe for about 11 years, it's traded with any kind of dependable price that you can go back and look at the data. And there's been periods when it's correlated to stocks, and there's been periods when it's uncorrelated to stocks. My best guess about what's going on recently is that the hedge funds and the active traders have finally come into the Bitcoin market in a major way. And they are driven by capital flows, just like most participants in financial markets. So yeah, when risk is on, they tend to take more risk. They use leverage. At the same time, it seems when tech stocks are likely to be going up. And of course, the reverse is true as well. I do see Bitcoin as a safe haven in the long run, but that's a multi-year thesis. That's a multi-year view. And yeah, in the meantime, it will trade as those who are trading it actively participate in the market.
So as we've seen Bitcoin fluctuate, and right now it's trading just higher than 39,600 on a pretty volatile day for the U.S. equity market as well. I'm wondering if you're seeing this lead to any sort of decline in interest around the crypto. And I'm wondering, because you have such great data on your platform, essentially this real-time ability to tell us in real time the interest around it. What are you seeing on the platform right now as the price fluctuates?
Yeah, so Tim, I would say quite the opposite. In fact, what I'm seeing from clients in the financial advisory space and wealth management, which is a $30 trillion area, roughly speaking, managed wealth in the U.S., I'm seeing more interest because we're getting interest from investors, talking about clients, who are pestering their financial advisors saying, maybe now is a good time to get into Bitcoin because the thing's not going away and it still has a lot of runway to rise in the long run. So for sure, there's fluctuations in price. Sometimes we're range bound, sometimes we're going up, sometimes we're going down. But what I'm seeing is that investors really are actually doing their homework and thinking about long-term positioning in Bitcoin, building a core position for the long run as this asset develops.
Hey, Andy, who are these investors? And I'm really curious about the demographics on your platform.
Yeah, I mean, it's a whole range. I mean, it's everything from younger folks, Gen Z basically, that are accumulating and saving in Bitcoin for the long run, to boomers and up. we've had a lot of interest, frankly, from high net worth and ultra high net worth individuals who are getting comfortable with Bitcoin since it's been around for over a decade. And they're also getting more interested as they see the inflation numbers continue to climb to levels that we haven't seen in 4 decades.
Help me understand, though. I know we were on our planning call talking about your thinking, your thoughts, your premise of crypto as maybe a key inflation hedge. How is that, especially with the volatility that you can see in crypto?
Yeah, so it's still early, to be honest, in crypto and Bitcoin. I think it's useful to differentiate between Bitcoin and the rest of the crypto asset space. Bitcoin, I would argue, is the only digital asset or crypto asset that has a credible hard cap and therefore limited supply, which is what's crucial for being an inflation hedge. So if I focus on Bitcoin and I ask myself, how can this thing be so volatile day to day and yet be an inflation hedge? And the reality is the volatility has come down roughly on an annual basis, sort of year over year in its 13-year existence. And so as volatile as it seems, the volatility is actually lower than it has been in the past. And then moreover, I look at the underlying characteristics of a hard money asset like gold. So I do the comparison to gold, and what I find with Bitcoin is that it actually scores better as a limited supply hard money asset inflation hedge than gold itself. And I can get into detail if that's of interest.
We don't have time. We don't have time to get to that.
Yeah, go ahead.
Andy, we don't have time to get to that, but we do have about 30 seconds left for one last question. What would you say to someone listening right now who's saying, wait a second, I'm interested in it, but the energy usage associated with Bitcoin troubles me? 30 seconds. What would you say to them?
Yeah, Bitcoin uses energy just like every other valuable asset. The last numbers I looked at indicate that it actually uses less energy than the gold market. But
I mean, gold involves actual physical mining.
Yeah, that's true. And it also involves, pollution and, use of toxic chemicals in the physical environment, which Bitcoin doesn't. So I'd say that Bitcoin is already an improvement on gold.
All right, we're going to leave it there. Hey, hopefully you'll come back and we can continue this conversation. Andy Edstrom, he is Managing Director of Advisor Services at Swan Bitcoin. They are an accumulation, Bitcoin accumulation platform, joining us on the phone from LA. Do want to mention some headlines crossing. This is coming from Cleveland Fed Chief Loretta Mester speaking in an interview on CNBC. And basically, when it comes to 75 basis points, she says the Fed does not need to go there. You're listening to Bloomberg Business Week. This is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You know, I really always look forward to the chart of the day, but you know what I really, really love?
What do you love?
When it's a Friday chart of the day.
Oh, interesting. This is a very special day because
I'm a simpleton.
Here we are. It's Friday, and we've got the chart of the day coming up. Preeti Gupta just walking in right now into our Interactive Broker Studio here in New York. Before we get to that, though, let's get an update on the trading day. A lot of declines across the board, Charlie Pellet.
Indeed, and that is putting it mildly right to the numbers. We'll give you the why in a moment here because we got the Dow down 700 points now, a drop of 2%. S&P down 86, a decline also of 2%. NASDAQ down 233 right now, a drop of 1.8%. 10-year yield 2.89%. We are off the bottom, barely. 28 minutes to go ahead of the close. Got to keep it locked in to Bloomberg Business Week for the very latest to see where things shake out at the close. Again, that 10-year yield 2.89%. Stocks lower. Gold down $17 the ounce to $19.34. Drop there of 0.9%. West Texas Intermediate crude down 2%, 101.70 a barrel. The stock rout is deepening. Very familiar themes that we've been talking about a lot here on Bloomberg Radio. Disappointing corporate results along with prospects for aggressive interest rate hikes certainly weighing on sentiment. Hong Kong will open to non-residents beginning next month, a sign the financial hub is taking some steps to ease up on the world's strictest pandemic travel rules. In the United States, meanwhile, coronavirus cases remain little changed. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health, and he says we are in a far better place in managing the disease.
We know it's going to be endemic. There is no way we will get rid of COVID-19. What we really are thinking about now is we don't want people to think that it's a minor threat because it still causes some serious disease. We can deal with it. We have the tools to deal with. We just have to use those tools efficiently now to maintain where we are.
And that's Dr. Pekosh with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine stocks, right now we've got Pfizer down 1.6%. Its German partner BioNTech, its ADRs down 1%. AstraZeneca's ADRs down 1.8%. Moderna out of Cambridge lower by 1.9%. Johnson & Johnson down 0.2%. Recapping 10-year yield 2.89%. S&P down 80 now, a drop there of 1.85%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, as we do each and every day at this time, we invite Preeti Gupta into our Bloomberg Interactive Broker Studio for her chart of the day. If you are still one of the few people who do not yet get Preeti's chart of the day in your inbox, just send her an email, kgupta129@bloomberg.net. That's kgupta129@bloomberg.net. Check her out on Twitter and Instagram at Preeti Gupta's News. Okay, so yesterday we looked at weakness in the Japanese yen. Today we're looking at a different currency, the euro.
It's the currency tour, huh? It's the currency tour way.
Magical currency tour.
Nicely done. There's a lot going on with FX this week in particular, so I feel like I should just take one day a week to do one currency pair, I guess, is what's happening. But for me, I think the euro dollar is a little bit more relevant to the United States because everyone likes to travel to Europe. It's lovely. This exchange rate is the most commonly traded exchange rate in the world. And it's the most heavily used, even more than the Japanese yen, which is what we talked about yesterday. So here's what's going on with it. We are looking at a 107 on euro dollar, or 1.07 on euro dollar. So basically, if you take $1 and you go to France, for example, you are going to get a, or excuse me, I should rephrase that. You're going to get if you bring $1.07. It's Friday. Yeah,
It's been a long day.
And
you
day.
only, you came in here at 3 in the morning?
Like 4 a.m. It's
okay.
my brain is mush, but
We're
that's okay.
fried.
I'm going to power through. Let me rephrase that. The handle you need to know is 107. When it gets to 1, that just means that you can take your $1 and you'll get exactly €1 in France.
It's parity.
It's parity.
When it first debuted, right? That's where we were, and then it quickly changed.
Yeah, I think when it first debuted, it was, as Tom Keene reminded me this morning, 1.16.
Yeah.
I believe was the level. The other thing to keep in mind here is that once it hits parity, it becomes a very bad signal for Europe because it means that they're not doing so well. They don't have kind of the edge, perhaps, that a lot of these companies did. What's important to also keep in mind is that as we talk about simply what could actually move it, right? Because if you see a lot more strength in the euro dollar, what it'll do is it can kind of change based on interest rate differentials, right? So we're talking about the Fed, we're talking about the ECB, and as we talked about yesterday with the Japanese yen, when the Fed is trying to hike more and more and more, it weakens the Japanese yen. The same thing is happening to the euro. It's weakening the euro, and that means people in Europe can't purchase as much as they could before, which is a problem, especially if you're trying to pay your energy bills or streaming subscriptions or whatever. So what's
Not
happening
good when there's elections, right?
Really, which brings us to the catalyst this weekend, right? To the French elections. Now, it sounds like it's something happening in a completely different country. Why do we care, right, Carol? Well, we care because it has everything to do with this exchange rate. Right. Emmanuel Macron is poised to win, has the lead at the moment. He's kind of known for being a centrist leader. Marine Le Pen is known for being a more right-winged leader. And that has very big ramifications for the euro, the way that perhaps the Biden and Trump election had for the US dollar, right? So a Macron win is poised to boost the euro a little bit, give a little bit of reprieve for a lot of those Europeans who are maybe looking to come to the United States for the summer and trying to spend a little bit more. But a Marine Le Pen win would weaken the euro to get this a 1.05 exchange rate.
So almost at parity.
Almost at parity.
She's much more nationalistic, isn't she? And much more, right? And Macron obviously much more international and focused, globally focused. And that's the other thing that's at play here.
Yeah, and it has ramifications for inflation, globalization, trade, and that's why you're seeing this move. If it does hit parity, though, that kind of has reverberations for a lot of corporate America, a lot of your S&P 500 portfolios, because every company will hedge for some of these FX rates, especially this one, because like I said at the top, it's the most widely traded exchange pair in the world.
What?
I just want to get a redhead that's crossing the Bloomberg terminal. Excuse me. Shares of Bed Bath & Beyond are surging right now after Dow Jones is reporting that Bye Bye Baby is drawing buyer interest. Suitors, according to the journal, include Cerberus and the SPAC chaired by ex-Casper CEO.
I saw that go by on Twitter. Nice job.
Thank you.
Bed Bath & Beyond. Bed Bath & Beyond?
Yeah.
Yeah. Okay, moving back to this.
Sorry, Katie.
No. It's
plot twist.
I'm always with the breaking news.
What I think is the bigger story here, and we talked about, is different central banks are doing different things. It's going to have implications globally, right? What the Chinese central bank might be doing versus the U.S. Federal Reserve versus the ECB, and it will have implications in global financial markets.
Yeah, and this is so unique because this normally doesn't happen, right? Every central bank tends to be on the same page, and this is a really unique scenario in that we're not. And you've heard that saying from Chairman Powell, from ECB President Lagarde, from the IMF, that it's really strange that we're in this very differentiated policy path.
Did you ever go into a Bed Bath & Beyond, get lost?
Bye Bye Baby, yes.
No, and Bye Bye, yeah, right? It's just like aisles and stuff, but Bed Bath & Beyond too. All right, Creedy, sorry. It's a Friday. She's like, okay, whatever. Creedy Gupta, have a good week. And our Bloomberg Markets correspondent, check out her chart of the day.
Let's get to world and national news with Nancy Lyons in D.C. Hey, Nance.
Thanks, Tim. U.S. Defense Secretary Lloyd Austin will host Ukraine-focused defense talks with allies at Ramstein Air Base in Germany next week. Pentagon's John Kirby says they're expecting a strong turnout of other nations.
About 40 or so other nations were invited to attend. Invitations are still, RSVPs are still coming in, but I can tell you that more than 20 of the invited nations have agreed to come.
Kirby says they're expecting to hear from more in the next few days. Well, as the war in Ukraine drags on, Congress is urging the Biden administration to do more on the humanitarian side.
More than a dozen House lawmakers from both sides of the aisle are urging the administration to fill gaps in Ukraine's medical infrastructure. Their recommendations include setting up field hospitals in eastern Poland, providing Ukraine with armored ambulances, and sending some of the sick and wounded to the U.S. military hospital in western Germany. President Biden announced $500 million in economic assistance to Ukraine as part of a $1.3 billion package. He says he'll ask Congress to authorize even more when lawmakers return next week. In Washington, I'm Nathan Hager, Bloomberg Radio.
Family and friends are paying tribute to Patrick Loyola, a black man and native of Congo who was fatally shot in the back of the head after a struggle with a Grand Rapids, Michigan police officer. The Reverend Al Sharpton is demanding authorities release the name of that officer. Also, Florida Governor Ron DeSantis this afternoon has signed into law a bill revoking Disney's special tax status. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C.
Well, earlier today, former Nissan president and CEO Carlos Ghosn spoke with Bloomberg's Matt Miller and Kayleigh Lyons about a variety of topics. In this excerpt, Ghosn explains why he fled Japan and how he's preparing to defend himself against financial misconduct charges. Check it out.
When I left Japan, I left with my French passport, by the way, and I entered Lebanon with my French passport because the Japanese authorities maintained my Lebanese and Brazilian passport in their hold, but they allowed me to keep the French passport because the only identity I had in Japan. So it's not true that I traveled outside Japan without the passport. I had a passport, and it was a French passport.
Okay.
The second point is I moved out from Japan by myself because I have seen, probably you have seen what happens to Greg Kelly, who it took 3 years and a half to obtain a verdict on one single charge, which was complicity in non-declaring a compensation that was neither decided nor paid. It took 3 years and a half. You can imagine how many years it would have taken the so-called hostage justice system to judge me on the multiple charges they brought against me. At least 10 to 15 years. So you can imagine me in the situation with the way I've been treated, not being able to talk to my wife, not being able to talk to the press, not being able to defend myself. They were safe that nothing is going to happen with this guy. We're going to maintain him in Japan forever. He's going to die a dog death here in the country, and nobody's going to hear about him. Fortunately for me, I was able to extract myself from Japan, and now I'm able to defend myself.
All right, that was former Nissan Motor Chairman Carlos Ghosn speaking with our Matt Miller and Kayleigh Lyons earlier on Bloomberg. You can get that entire interview. It's really worth a listen. You can find that at Bloomberg.com. Keep in mind the news today, French investigators issuing international arrest warrants for Carlos Ghosn and for others who allegedly helped him siphon millions of euros from partner Renault. So that story continuing on. All right, check it out at Bloomberg.com and check out that interview.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. Right to the numbers. The Dow down 808 points now, down 2.3%. The S&P is down 100 even, a decline there of 2.3%. The Nasdaq Composite Index down 281, a drop there of 2.1%, extending the year-to-date loss for Nasdaq to 17.5%. The S&P down 2.2%. All 11 industry groups in the red. The tech-heavy Nasdaq 100 index also moving lower right now. That index trading lower by about 2%, leaving it down more than 9% so far for April. The 10-year yield 2.90%. Spot gold is down $18 the ounce, down 0.9% to 1933. West Texas Intermediate crude oil down 2%, 101.69 a barrel. Earnings news: Verizon shares are down 5.1%. Also after earnings, American Express down 2.2%. HCA Healthcare plunging now by 22.1%. Recapping, stocks are selling off 12 minutes to go ahead of the close. The S&P now down by 2.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Can I just do wow, and you can tell our audience why I'm saying wow?
Yeah, because we're talking about some superlatives with the sell-off that we're seeing that Charlie was just talking to us about. The NASDAQ 100 seeing its worst month since the collapse of Lehman Brothers.
That's pretty...
That was a wow to you.
That was a wow to me. I remember that time when it felt like, the markets were just coming undone. So that's...
We're talking November 2008.
And this is after a rough first quarter. Mm-hmm. So that's the last month.
The NASDAQ 100 market cap falling $1.4 trillion just in April alone.
Yeah,
that's almost the entire cryptocurrency market.
That is, there's some perspective for you. Well, it's interesting too because energy stocks have been such an outperformer. They're the best performing major industry group in the S&P 500 this year. But we've seen some pressure as of late. And I talked earlier with our TV colleagues about WTI crude. It's on track for its third weekly decline out of 4, and a lot of it has to do with we're watching the demand or lack thereof out of China, expected to be, in terms of oil demand, down 20% this month, and this is coming from insiders within the government who are familiar with Chinese demand when it comes to energy specifically. That economy is so important. We watch it for many, many reasons. It's the second largest economy that we've got out there. And so you do wonder that there's a lot of questions about kind of what comes next, and you're seeing that play out in the market.
Yeah, well, speaking of the equity market today, Carol, in the Dow, 0 of the 30 stocks in the Dow are actually higher today. Only 21 stocks in the entire S&P 500 are higher today. 481 are lower, and the NASDAQ, it's much bigger. 705 are higher, but 2,528 are lower today.
What I found interesting, and we've had a lot of positive airline news this week, and we've seen that group on a tear. United, it's actually going to be one of my gainers when we catch up with our TV colleagues for Beyond the Bell, but it's up. It was up 9.3% yesterday. It's up another 1.2% today, so we're continuing to see investors. I also think, forgive me, and I'm going to just pat myself on the back a little bit. But Loretta Mester, chairman of the Cleveland Fed, forgive me, my Friday brain. Thank you, Ari, for helping me out there, our producer, Ari Agami. Coming out and saying that we're in a recalibration phase for policy. And I have to say, I've been putting this out on Twitter because I think there are so many things being recalibrated as we move increasingly, finally, it feels like, from that pandemic-led economy, right? And maybe that's what we saw a little bit with Netflix, and we're seeing airlines certainly outperform and leisure and hospitality continue to come back. Recalibration when it comes to the energy markets, right? Continuing to move towards alternative energy, but yet in the meantime, we are having some significant demand still on fossil fuels, but where we're going to get it is shifting because of the war in Ukraine.
What was that, the date that Javier Blas gave us yesterday? He said, well into the next few years, we're going to continue to rely on fossil fuels. We talk a lot about the energy transformation, Carol, and I think what's come into sharp relief for many people this year, not just people who follow the energy markets, but people who go and fill up their gas tanks, is that we are a long way from being transformed away from fossil fuels. And what Javier was telling us yesterday from Bloomberg Opinion, who covers energy and commodities is that we're going to be seeing demand like this well into 2030.
What's interesting too, and let's go, a week ago, we were talking a lot about the New York International Auto Show, and they actually had a test track on the lower floor because
Not for gas powered cars,
for
right?
EVs, but you do feel like all of a sudden it was just, we would talk about Tesla and what they were doing in particular, and everybody else was playing catch up or thinking about it, or working on cutting old brands and talking about EVs, and then all of a sudden you're seeing so many different car makers out with EV brands. What I do want to just take you back to the markets, if I may, because I'm watching, here we are with just about 7.5 minutes left in the trading session, and we are seeing the equity markets go back lower, and now they had bounced off their lows, and now we've taken another leg down, and it could be just ahead of the weekend, people kind of squaring their positions and maybe looking to unload some names ahead of, which has been really the tone all day.
We also think to catalysts that are coming next week, Carol. We mentioned some of the earnings that happen this week and the way that stocks are reacting. If you take a look at shares of HCA Healthcare, for example, Verizon, Gap, all lower off of earnings results. Next week, we hear from UBS, HSBC, Santander, Credit Suisse, Barclays, NatWest, Deutsche Bank, HSBC. We're also going to hear from energy companies, including ExxonMobil, Chevron, and more. And then you have the big tech companies, Activision Blizzard, Microsoft, Texas Instruments, Alphabet, Meta Platforms, PayPal, and more.
It's going to be busy, and we're going to be looking for commentary, insight. We have seen when companies come out and report earnings that you do see investors react to that specific company, but they can also take down other names or take up other names in that particular space. I got to go back to the markets because I'm watching some selling here. We did see stocks bounce after Loretta Mester did say of the Cleveland Federal Reserve that she says the Fed didn't need 75 basis points
That was
at
aggressive,
the next
right?
meeting.
As you reminded us.
Yeah.
When I was talking about the Nomura note from last night.
Very, very aggressive. And I keep going back to Michael McKee, who's followed the U.S. Central Bank through many different heads and many different market cycles and economic cycles. And when Jay Powell at the IMF meeting talked specifically about a 50 basis point move, he said, listen, when Jay Powell comes out and says that, you got to expect that's what we're going to get at that next FOMC meeting.
Carol, I talked about what the composition was of the sell-off that we're seeing today. If you look at the NASDAQ 100, it is pretty remarkable. 97 of the 100 stocks in the NASDAQ 100 are lower. Electronic Arts, JD, and NetEase are the only ones in the green.
Yeah, so we're seeing pretty broad-based selling. All right, let's talk a little bit about the markets as that selling intensifies. With us is Roger Mortimer. He's portfolio manager at Crane Shares. He's joining us on the phone, from San Francisco. Roger, good to have you here with us. It does feel like the selling is intensifying. What are you hearing? What are you seeing about, are we headed lower? Are we headed higher? What's the outlook here?
Well, Carol, thanks very much for having me. Well, our focus with a new fund that we've recently launched, the Global Carbon Transformation ETF.
Tough to launch in this environment, right?
Well, we're focused on structural growth areas that are arising from decarbonization. And we're actually extremely optimistic that for a variety of reasons, the pace of engagement and change around decarbonization is accelerating. And this is an area that is driven largely by government policy and is not really affected in the short term by interest rate or FX relationships.
Roger, one thing that we talked about yesterday with Javier Blas, the co-author of the book, The World for Sale, and our colleague here at Bloomberg News, he writes for Bloomberg Opinion about commodities and energy, is that even though we are a long way away from moving away from fossil fuels, there are still investment opportunities when it comes to the transformation of energy. What are those investment opportunities that you're bullish on? We've talked a lot about commodities. What's in your fund?
Yeah, well, global energy demand is going to grow by 50% over the next 30 years. And for now, we still run 80% on fossil fuels. And so the opportunity really is to reinvent the energy infrastructure that runs the world today. And broadly speaking, that means a transition to lower emission technologies. That means the build out of renewable energies and energy efficiency and technologies that reduce emissions in the environment while still allowing for economic growth. And we look for companies that are allocating a growing share of their capital to these new areas because in a world that looks at energy companies differently.
Well, and when we're making investments in this space, and we've been talking about kind of ESG having a little bit of a reckoning, just got about 20 seconds here. it's going to be tough in some cases to find those pure kind of climate or conscious plays at this point?
We're really focused on transformation, Carol. So we look for companies that are going to look very different to the way they look today. So RWE is a German utility that is going to triple its capacity over the rest of the balance of this decade, and that will come entirely from renewables. Today, people think of that company as a coal-fired utility, but in 5 or 6 years, they'll look at it quite differently.
All right. Good to check in with you and hear about that new fund. Roger Mortimer, he's portfolio manager at Crane Shares, joining us on the phone from San Francisco. Folks, when it comes to the equity trade, pretty much at our lows, so that means down 2.7% on the S&P and the Dow Jones Industrial Average. For the NASDAQ, down about 2.5%. So we are seeing some selling here into the close. All right, it is time to head over to our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and YouTube. We're counting you down to the close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now we are 2 minutes away from the end of the trading day. Romaine Bostic, Taylor Rigg, Shonali Bastick in for Caroline Hyde. We're counting it down to the closing bell here on this Friday afternoon. Here to help take us beyond the bell. It's our global simulcast with Carol Massar and Tim Stenovic. We welcome our audiences across Bloomberg Television and radio as well as YouTube. And Carol, we're looking at stocks right now around the lows of the day. The S&P 500 down about 2.7% here. Nothing is really getting bid, and you have to wonder whether this has to do with the fact of what's being priced in, I guess, to the options in the bond market with regards to Fed rate hikes.
Absolutely. It's all about the aggressive Fed that is really kind of freaking out investors. What's interesting, Loretta Mester, who gave an interview on CNBC, of course, head of the Cleveland Fed, talked about, wait a minute, 75 basis points. Fed doesn't need to do that. And we did see a little bit of a bounce in the equity markets off of that, but then we just rolled right over to our lows of the session.
It's been a particularly brutal month for tech stocks. The NASDAQ 100 heading to its worst month since November of 2008. So far this month, the NASDAQ 100 market cap has fallen $1.4 trillion.
Looking right now, of course, according to our SINS function, one of the worst days that we've had since about March 7th here. That time it was about a 2.95% drop here. So really, Shonali, trying to put some of this into context here as we head deeper into red in the last few moments. And I think one thing that you and I have been talking a lot about is the yield story that was big, yield higher. That is erasing sort of on a flight to safety, risk off kind of day.
Truly, and the flattening of the yield curve once again here. We were so excited about the steepening early in the week, and that tailwind is gone.
And I think it's interesting. I mean, we talk about the S&P that, of course, was back in February, late February, kind of went into correction, and it stayed there for a little bit. Then it kind of climbed out. At one point in the middle of March, it actually looked like it had the potential to actually go back into positive territory here. But as we get the closing bells right now, we're looking at an S&P that's down 2.8% on the day. That's going to bring its big drawdown now down to 11% from that all-time high. So back down into correction territory. Only 15 stocks in the S&P 500 managed to finish in the green on the day. That means roughly 97% of that index is in the red on this day. We haven't seen that type of broad-based sell-off going back to late November. The NASDAQ down 2.5%, down about 335 points. The Dow Jones Industrial Average going to finish the day down by almost 1,000 points, 979 to be exact, 2.8%. And Carol, the Russell 2000 down about 51 points or 2.6%.
Yeah, feeling remain like there's nowhere to hide. But if you're wondering where investors were hiding this week overall, looking at those major industry groups in the S&P 500 for the week overall, real estate actually showing a gain of about 1.25%.
Yeah.
So that's where we saw some.
I can't wait to see your gainer board in a couple of seconds.
It was not easy, but I've got some good ones. All right, Taylor,
Hopefully
take it
they're
away.
still higher, Carol.
Well, Carol, unfortunately, I do not have any gainers to help you out here on a sector level for our radio audience. We dive down sort of 2 sector levels to get some broad breadth and scope here for the markets. Even the sectors that are, quote, the best performing are still deeply in the red, but it does have that defensive tilt to it. It's household products, it's utilities, it's food and beverage. Looking at you, Kimberly-Clark, for example, you're only off, though, about 0.3% to about 2%. Everything else, though, that is some of the worst performers are off 3, 4, 5% even. And those are all the risk on sentiments that are in the red. It's materials, it's telecom, it's hardware equipment, it's media. Really, really, Carol, not having a good day today.
Yeah, not at all. But hey, you know what's a gainer? Twitter. It's actually up another 4% in today's session. Not one of my gainers. no-brainers, but I did want to mention it. SVB Financial Group, check this one out. Was up 15% at its high, even at the close, still up about 7.5%, surging after a first quarter EPS beat, also net interest margin topping analyst expectations. It had been the worst performing stock in the KBW Bank Index year to date through yesterday's close, but a bit of a different story, certainly in today's trade. Kimberly-Clark, you know the story. We've been talking about it. A beat. They've been able to raise prices. That stock was up more than 8% in today's trade. And airlines continue to outperform. That's been one of the big themes, certainly this week. And UAL up another 1.2%. Romaine, I'm guessing you saw this. Did you see JP Morgan doing a double upgrade on that stock, moving it to what? Overweight from underweight.
Yeah, and I just want to add a fourth to your board. We were talking about this on Bloomberg Television. Bed Bath & Beyond, those shares had been halted. This on the back of that news that Dow Jones is reporting that they had attracted some interest for that Bye Baby unit. Those shares did resume trading, and they did end the day higher by about 7%.
Yeah, it's up about 20% so far this year.
Well, no difficulty in finding decliners on this Friday afternoon, starting with HCA Healthcare, wiping out nearly $17 billion in market value today, finishing the day down by more than 21%. This after the hospital operator cut its forecast for the year. Verizon shares also down by 5.6% today. Verizon dropping the most in 2 years after cutting full-year sales forecast. The company facing not just competition, that's from AT&T and T-Mobile, but also getting hit by consumers paying more for things. The company's CFO, Matt Ellis, telling Bloomberg News that the overall rate of inflation wasn't baked into their planning assumptions. So people paying more for gas and other goods not baked in.
Wait, he said that wasn't baked in?
Yeah, their initial forecasts. Yeah, he didn't think that inflation would be at a 40-year high when they were doing this late last year.
Okay.
So,
I could introduce him to some economists that we have from time to time.
Wow, okay. Hey, let's get to Gap. Finishing the day down by 18%. Gap shares tumbling after slashing its sales outlook for the first quarter, announcing that Old Navy CEO Nancy Green is leaving this week. She came from Athleta, and she's leaving the firm. So not a good sign there. Also causing shares of other retailers to move lower, too.
I want to take a look at what else is moving lower, Tim, and that is price lower, yield higher. And it's a Friday, so I wanted to take a look at some of the weekly moves that we've seen in the yield space. And it is all about the front end of the yield curve. And I think that really tells the story when you're only up about 7 to 5 to 3 basis points out on the long end, but then 24 basis points higher on the 2-year yield. And Romaine, I think that really tells the story about all the Federal Reserve commentary that we've gotten out, and really curious now about 50 after 50 after 50.
Yeah, definitely. You see that aggressive repricing right now, and maybe we heard from, you mentioned Loretta Mester speaking on CNBC, I guess, trying to tamp down some of the wilder speculation about a 70 basis point hike, but nevertheless, the market.
And she's a hawk, right?
Yeah,
she's more hawkish.
Yeah, but the market's been rattled. I mean, let's face it. I mean, Jay Powell seemed pretty definitive in his commentary yesterday at that IMF panel that he was on about the idea of 50 basis points being on the table. You continue to hear from Bullard. All the members. I mean, is there any member of right now of this Fed who hasn't sounded a hawkish tone over the last few weeks?
And we just talked to an investor who's talked to us about how spooked he was about the idea of 3 50 basis point hikes. That was Chris Ailman over at CalSTRS. And it's going to create an overhang for some time. But the question then becomes, what is the low for the S&P?
Yeah, Carol, certainly a lot to digest. I think Romaine had really smartly pointed out that tomorrow kicks off the quiet period as we think about a Federal Reserve. So we might get some calmness, at least for now. But the equity markets and I guess the swap markets, you could call it here on the front end, are certainly telling you a different picture here about front running and this need to increase hikes maybe faster than other market participants had expected.
Let's not forget, too, this is we had definitely had some earnings earlier today, but this was not something that we're breaking a bunch of earnings here at the close that help kind of shape the tone. But I do wonder, the earnings next week, we get some big ones, Tim. You and I were talking about it a little bit in the break. I mean, I do wonder how they can maybe help calm investors down, especially if we get some positive reports.
Yeah, and also do we see what we saw from companies this week baked into the earnings next week? Like, did Snap results help us understand what's going to happen to Meta platforms, for example? We get PayPal next week, we get Pinterest, we get Apple, of course, Amazon, Twitter, we get Intel. We also get more financials, Credit Suisse, Deutsche Bank, Lloyds, Barclays, Standard Charter, and more, Romain.
Yeah, and I mean General Motors, a few others. I mean, so it's not just tech. You kind of you're going to get a nice read, I think, across the economy, both in terms of consumer spending, tech spending, business spending. Don't forget things like Whirlpool. So we'll get kind of a sort of a side read on the housing market. A lot that's really, I think, going to give investors some clarity, or maybe it just causes more confusion.
I also do wonder, I feel like there's such a negative news flow right now. I was looking at some of the stories about recession risk is growing among the regional banks. You have the outflows from B of A. I mean, it just is
the
kind
media,
of rough.
We're so
these are
gloomy.
banks. These are financial. But you do wonder, and we get these swings where it feels like it gets overdone, and then all of a sudden investors come in and then they bounce back, and then it's overdone to the
There's
upside.
enough to keep your blood boiling, guys. If you want to stay around through next Friday, through the close, you have Twitter over there reporting earnings, and there's a lot of expectation of updates there on all the deal-making conversations going on.
I just want to bring up one other quick thing here, too, because, I mean, when we kind of talk about the broader picture, we kind of forgotten about the role that commodities has played in this and the real effect, the negative effect that it's been having on a lot of the developing market countries. There's been some great reporting on the Bloomberg terminal this week just about all the emerging market pain that's been going on out there because of this, and now the concerns about is there spillover into the developed markets as a result.
Dollar strength certainly does not help that. I'll leave you off with this quote that we had from Steve Sosnick, of course. It said if earnings are the 9-inning game, the bank earnings that we were all cheering was really just the preamble, right? Or
the national anthem.
The national anthem, where it sounds all good and well.
You're
But
getting to
does
the
Bank
quote.
of America's trading revenue tell us anything about the economy and the earnings? And he rightfully pointed out respectfully, no, it does not.
That's exactly what I said to you this morning, Romain. Wasn't it?
Yeah.
The banks don't tell the whole story.
All right, well,
They don't, but we do get a good read on the consumer and a lot of signs, and I'll end with some optimism, pointing to the consumer is still strong and willing to spend.
And a certain, I mean, we're running out of time, but I do wonder whether some of that data is a little distorted. It's distorted more towards, I guess, a wealthier consumer.
For American Express, certainly.
And that's what I sort of wonder, that like we know wealthy people are still able to spend, but what about
And fly.
on the lower end of the spectrum? That's right. I mean, Carol's going to swipe her her black card a million times this weekend as she goes out in her yacht to wherever she goes. It's going to be warm this weekend, I think.
It's going to be warm. Yeah, exactly. I'm going to go back to Loretta Mester. I know we have to run, but that recalibration, let's not forget, we're finally, it feels like, coming out of the pandemic. It's not pure, and depending on where you are in the world, that's not necessarily the case. But there's problems still that need to be worked out, and I do feel like our data points are still not clear and clean. And until we get through that, it's really hard to figure out what comes next. And I think it's hard for the Fed to do policy.
Yeah, agreed.
We got to go. All right.
All right. Happy Earth Day, guys.
I'm going off to use the black card.
All right.
All right, got to run. We'll see you. That's going to do it for our cross-platform coverage beyond the bell, radio, TV, and YouTube. Have a good weekend, and we'll see you again on Monday.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Let's get to Washington, D.C. with an update from Nancy Lyons. Hey, Nance.
Thanks, Tim. The United Nations says Secretary General Antonio Guterres plans to meet Russian President Vladimir Putin next week to make an urgent face-to-face plea for peace in Ukraine. Kremlin spokesman Dmitry Peskov has confirmed Guterres is due to meet Tuesday with Russia's foreign minister, Sergei Lavrov, and Putin will host the UN chief as well. President Biden is observing Earth Day in Seattle and went to a public park with a plea for Congress to follow up the climate provisions of the infrastructure bill by passing more climate proposals. Bloomberg's Irv Chapman has more from Washington.
The president ticked off the accomplishments to date, from clean water to biofuel for jet airplanes.
It's incredible the breakthroughs that are making. Once you tell a nation that we can do this, go do it. It's amazing what happens.
The president lamented the lack of Republican support for climate measures.
This ain't your father's Republican Party. This is the MAGA party now. The senator from Texas and others, these guys are a different breed of cat.
The president signed an executive order to protect old-growth forests on public lands that draw carbon dioxide from the air. In Washington, Irv Chapman, Bloomberg Radio.
Florida Governor Ron DeSantis has signed a bill stripping Disney World of its special status. With the stroke of a pen, Disney World is no longer a self-governing body and has been stripped of its special tax status. Many view the legislation as retaliation for Disney's vow to help repeal the state's parental rights and education law, which critics are calling the Don't Say Gay bill. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy, thank you so much. Nancy Lyons in our DC newsroom. So this story certainly popping up on our radar. It's among, or has been among, the most read on the Bloomberg terminal today. And something we like to watch. It's certainly shipping ports, supply chains, snarls, lack thereof. And it sounds like if you go up north, you might find a better way of doing it all.
At least that's what the head of Canada's second biggest port is saying. They've got a supply chain sales pitch that a few of his peers in the global shipping industry can match. 0 wait time at sea for container traffic. We're talking about Martin Imblo, the chief executive officer at the Montreal Port Authority, said that the ability to dock and load efficiently there is luring new clients, even though doing so requires traveling the length of the St. Lawrence River, 1,000 kilometers, that's 620 miles, inland from the Atlantic Ocean.
So how deep is that? Because not everybody can probably do it. Because those massive tankers,
no idea.
Can they do that? Because a lot of the ports were even being dug out, like along the East Coast, so that they could, be ready for super tankers. And okay, lots of questions.
I'm trying to figure out the answer to your question, Carol.
Yeah. Well, pent-up consumer, well, you figure that out.
No, I can't find anything about dredging.
A pent-up consumer demand after 2 years of supply chain disruptions, we know, we've talked about this a lot, has led to bottlenecks, at major ports. Wait times at Montreal's main competitor in North America on the East Coast, the Port of New York and New Jersey, spiked to 4.75 days at the end of 2021, compared with an average of 1.6 days over the whole year. It's a story we've been talking about a lot.
It is, and shipping patterns are changing as a result. For example, China now accounts for more than a quarter of all traffic in the Port of Montreal, compared with almost nothing 5 years ago. That's according to Imblau. Much of that new traffic enters the Atlantic Ocean through the Panama Canal, stopping in Montreal on the way to Europe.
So it's interesting. This is basically where people are rethinking, okay, if it's not working here, where else can I go? And, kudos to the folks up in Montreal, right? Because they are figuring out maybe how they can bring in new business as a result of these problems.
In addition to China, the head of the port expects to see more traffic from Indonesia and India coming through his port. He also said that the recreational products spinoff of Montreal Aerospace Bombardier is doing increased business with Vietnam.
Interesting story and certainly timely. All right, you're listening to Bloomberg Business Week, and this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Third weekly decline for the U.S. stock market. The Dow, the S&P, NASDAQ all lower today. A lot of the losses intensifying in the final 30 minutes of trading, right to the numbers, with the Dow down today by 981 points, a drop of 2.8%. The S&P was down 121 points, down 2.8%. NASDAQ down 335, down 2.55%. The 10-year yield 2.90%. Stocks lower as disappointing corporate results and prospects for aggressive interest rate hikes weighed on sentiment. But among some of those corporate names that did report this morning, Verizon Communications down 5.6%. American Express was down by 2.8%. And HCA Healthcare lower by 21.8%. Again, the 10-year yield 2.90%. Gold was down 1%, down $18 the ounce to $19.33. West Texas Intermediate crude oil down 2.5%, $101.18 a barrel. So again, third weekly decline for the U.S. stock market. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, in our latest edition of the Business Week Editors Roundtable, we take a look at the story of how two cops cracked the $100 million mystery of the alleged hijacking of the tanker Brillante Virtuoso. Here's Business Week Editor Joel Weber and Bloomberg reporters Kit Chalel and Matt Campbell with the details.
It's a murder mystery, and it becomes something bigger than that even. And it actually started in 2011 when a tanker, Brillante Virtuoso, basically was passing through an area that is at the time was being attacked by pirates very commonly. And what kind of transpired from there is the subject of the book. And it all began, I think, with Kit and Matt realizing when this Bloomberg News headline that I don't think they were involved with, but this was the Bloomberg News headline: million-barrel tanker on fire off Yemen after grenade attack. So from that headline, it became this Business Week feature story 5 years ago, even before me. I remember reading that story and thinking that it was one of the best Business Week stories that had ever been published. And so I was thrilled to publish the excerpt in the current issue because it shows it becomes like a little bit of a bookend, and we're not going to give away the total ending of this thing. I do think it's got movie potential. But Matt, what was it about the Brillante Virtuoso that captivated you guys initially?
It could have been just like any one of the hundreds of pirate attacks. But actually what transpired was that this pirate attack was not at all what it seemed. And in fact, there was a much larger game going on here. And the more Kit and I dug into it, the more we learned, the more people we talked to, the story just got stranger and more twisted. And even after we wrote the 2017 Business Week feature, we remained a little bit obsessed by it. And coming back to it for a book was an obvious choice.
Well, Kit, come on in on this. Tell us about these two ex-cops, because these two guys sound like interesting characters. I mean, these are two individuals who've known each other for a long time. Tell us about kind of their role in all of this.
So these two guys are Richard Veal and Michael Connor, and they work in the private investigations industry in London. It's a big industry here in London, and a lot of the people who filter into it used to work for the government. In many cases, they're policemen. So Richard and Michael used to work for the Met Police and sort of filtered out of public service. And Richard started up his own investigations firm to do exactly this sort of thing, to unravel mysterious and high-stakes, commercially valuable events for paying clients. And so these two guys are hired by the insurers of this ship, the Brillante Virtuoso, to try and find out what really happened to it.
So, Kit, enter X-Ray. Who is X-Ray? And
can I have a nickname like that?
If you become some sort
alias?
of informant and maybe
so.
you spend some time on a ship, you
All
could,
right.
Carol. Tell us about X-Ray.
X-Ray is one of a handful of whistleblowers in this case. So, as Matt alluded to, the attack on this vessel carrying 1 million barrels of oil wasn't what it appeared to be. It wasn't actually pirates at all. It was part of this insane conspiracy that reached right to the top of the shipping industry. And right from the start, the insurers and the investigators were a little bit suspicious of what happened to the Volante. It just didn't seem like piracy. It didn't really make sense that pirates would board this vessel and set it on fire. And so right from the start, they felt like something was off, but they didn't have a lot of proof. One of the things about criminal activity at sea, which has been going on, since the dawn of time, basically, is that it's extremely difficult to prove anything. These events happen miles out away from the jurisdiction of police. Often the only witnesses, if there are any witnesses at all, are sort of terrified sailors. So it's a really tough area to gain any sort of truthful insight into murky maritime goings-on. But in this case, a couple of guys who were directly involved in the aftermath of the attack, trying to salvage the vessel, or they'd been sent to deal with the attack and had first-hand knowledge of what was going on. These guys sort of appeared out of the woodwork quite late in the game, and they approached the insurers and their agents and basically said, we know what happened here. We know what happened to this ship, and maybe we'd like to help you. And so the job of Richard Veal and Michael Connor is to sort of work out X-ray. Who is this guy? They didn't really know who he was. Can we trust him? Will he tell us the truth? Is he dangerous? They went into all these meetings with really no idea about what was going on.
Love that. That voice, of course, Kit Chellel. He is Bloomberg News senior writer. Kit Chellel, he was there with us, along with Matt Campbell, who's Asia editor for Bloomberg Business Week, along with Business Week editor Joel Weber. That's just a portion of our editors' roundtable. What's interesting, though, is these guys have been following this story, first wrote about it for Business Week back in 2017, and that reporting eventually led to this new book that they've got out, which is Dead in the Water, a true story of hijacking, murder, and a global maritime conspiracy. And I have to say, as I was reading the story, it does read so well. It's fascinating, and it's a true story.
That book coming out in May, and you tried to get the answers as to what happened in the end from Kit and Matt. They wouldn't tell us. They wouldn't tell us, but it's definitely worth a read. Again, on the Bloomberg Terminal and also in Bloomberg Business Week.
Yeah, and in our editors' roundtable, which is a great just conversation. Joel joins us, and you can catch some of that or a lot of it in our weekend radio show on Bloomberg Radio at 8 a.m. Saturday, and it's also in our podcast feed.
What would be so X-Ray was the name of this source. What would be your source name?
I have no idea.
Yeah, I don't know what mine would be either. You got to come up with a good one, though. Can't be X-Ray.
Tree pose.
Tree pose. That's good.
Downward facing dog.
Yoga reference. I
don't know. Bug pose. All right, we got to run. This is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week.
Jinx.
Carol Massar and Tim Stenevec live in the Bloomberg Interactive Broker Studio in New York. One of the great things about our program is we get a little chance to talk to David Weston each and every day when he finishes up his show. And
it's like a favorite moment, right?
It is. And you and I both walked in here and said, that was a show, David Weston. You had some great guests on there.
And that includes Janet Yellen, the U.S. Treasury Secretary, former chief of the U.S. Central Bank. So you're going to hear some of that conversation in just a moment. First up, though, let's get back to your top business stories. Another busy day here at Bloomberg. Here's Charlie Pellet.
And that's the way we love it. Carol Massar with the Dow, the S&P, NASDAQ all declining today, capping a third weekly decline. Those losses intensifying ahead of the closing bell. Today, the Dow down 981 points, down 2.8%. S&P down 121, down 2.8%. NASDAQ down 335, a drop of 2.55%. 10-year yield 2.89%. Spot gold down $19 the ounce, lower by 1% today to $19.32. Stocks fell as disappointing corporate results and prospects for aggressive interest rate hikes weighed on sentiment. A key inflation component has been energy costs, specifically gasoline, and Amrita Sen is Director of Research at Energy Aspects Limited in London. And this morning she told us drivers could be seeing higher gasoline prices this summer.
We still are going to be missing a lot of these Russian blend stock material that the U.S. would have imported otherwise. Demand has come off a little bit in the U.S., but not huge amounts. I wouldn't rule it out. I absolutely think it's possible that we go back to those record highs, if not higher, this summer.
ExxonMobil plans to prohibit the LGBTQ rights flag from being flown outside its offices during Pride Month in June, prompting a furious backlash from Houston-based employees. According to the policy seen by Bloomberg News, Exxon updated company guidance on what flags can be displayed outside its offices, banning so-called external position flags such as Pride and Black Lives Matter. Today, ExxonMobil shares down by 2.2%. Recapping stocks lower, the Dow down 981 points, down 2.8%. S&P down 2.8% as well. NASDAQ was down 2.5%. And that's a Bloomberg Business Flash.
All right, Charlie, thank you so much. So a lot happening in Washington this week. There was the IMF meetings. There was also a meeting of G20 finance ministers and central bank chiefs. And that at that session included folks like U.S. Treasury Secretary Janet Yellen.
Yeah, U.S. Treasury Secretary Janet Yellen also speaking with Bloomberg's David Weston earlier today about the economy, trade tariffs, and Russian sanctions. In this excerpt, Carol Yellen talked about her long-term outlook for inflation.
I know you're coming off a long week of meetings there in Washington, World Bank and IMF. One of the things I think we learned is we don't only have inflation in the United States, it's sort of a global phenomenon. But talking about the United States specifically, we know your old shop, the Federal Reserve, says they're going to do everything in their power to try to get inflation under control. What are your projections, though, given what you expect maybe the Fed might do? What are your projections over the next 24 months, not just this year, for growth in GDP and for inflation?
Well, you know, the IMF just issued its most recent World Economic Outlook, and they're projecting growth this year of over 3% for the United States, which is given that we're almost fully recovered from the pandemic, is a good, strong performance for the United States and consistent with a labor market that will remain very strong. I think, you know, judging by the U.S. unemployment rate now and other measures of the performance of the labor market, it's been decades since we've seen such a strong job market with such excellent employment opportunities for people. You can see that in the high quit rate and the enormous level of job openings. So, you know, the Fed is concerned about inflation. They've made clear that they will be removing accommodation to try to get it under control. But I know they'll try to achieve a soft landing, and with some skill and some luck, we'll have a very good year for the U.S. economy in terms of the job market this coming year.
So are there things, I know that it's the Fed's job, it's part of their mandate to really control prices, and that's their job, and I know you really respect the independence of that organization that you ran, but are there things the administration can or should be doing? Let me be very specific. There's a Peterson Institute study out this week that says that if you took off the so-called Trump tariffs, that would reduce inflation right away 1.3%. I know that's being studied, but inflation is here and now, and it's been coming for a while. Why don't you just do it?
Well, we want to do everything that we can to lower inflation, and the president has announced an unprecedented release of oil from the Strategic Petroleum Reserve that is serving to hold down oil prices. I think gas prices peaked and have now come down some from their peak. We're working very diligently on supply chain issues to get our ports working better, and we're doing what we can to bring down inflation, so that's very important. You know, we're re-examining carefully our trade strategy with respect to China, and you know, I think it's worth considering. We certainly want to do what we can to address inflation, and there would be some desirable effects. It's something we're looking at.
That was U.S. Treasury Secretary Janet Yellen catching up with Bloomberg's David West. And, of course, David, host of Balance of Power on Bloomberg Radio and Bloomberg TV. You can check out more of that interview at Bloomberg.com. Also, catch it on Wall Street Week with David over the weekend. What's interesting, and I kind of left it out going into it, but David, I believe, gets into it in that conversation, is that I mentioned the G20 finance ministers and central bank chiefs that have been meeting in Washington this week. And at one session, Treasury Secretary Janet Yellen led a partial walkout from a session that featured Russian officials in protest over their inclusion given Moscow's invasion of Ukraine. So a meeting of world leaders, so much top of mind, and of course the war certainly front and center too.
Yeah, a lot of interesting, I don't even want to call them tidbits, but headlines coming from David's interview with U.S. Treasury Secretary Janet Yellen. She did suggest that the U.S. is open to scaling back the widespread Trump-era tariffs on merchandise imports to help provide Americans relief from the fastest inflation in 4 decades. She did say we're re-examining carefully our trade strategy with respect to China. It's worth considering. We certainly don't want to do what we can. We certainly do want to do what we can do to address inflation, and there would be some desirable effects. It's something we're taking a look at.
Yeah, I mean, you know, the administration looking at so many different things when it comes to those higher prices are out there. We've seen that certainly with the release of strategic, reserves, and that has certainly helped out, I guess, to some extent, the energy markets here in the U.S.
Yeah, we noted in our Bloomberg News story that the Peterson Institute for International Economics last month estimated that eliminating a wide array of those Trump-era tariffs, including those on Chinese goods, it could reduce inflation by 1.3%.
That's pretty significant.
That's significant.
That would bring it down. Still high, but would bring it down a lot. All right, catch David's interview on Wall Street Week and also on the Bloomberg Terminal. You are listening to Bloomberg Business Week. Carol Massar, Tim Stanovic, right here on Bloomberg.
Let's get to world and national news. Nancy Lyons standing by in Washington, D.C. Hey there, Nance.
Thanks, Tim. President Biden is in Seattle for Earth Day and says he's signing an executive order with the aim of protecting the nation's old-growth forests.
We're going to work with state and local and tribal governments to map, catalog, and then conserve old-growth forests on our public lands.
Biden says by tracking U.S. forests, they'll be better able to protect them from climate change. He says they deserve that since those old-growth trees remove at least 10% of the greenhouse gases from the atmosphere. It is unclear what the fallout will be to an audio tape posted by the New York Times that aired last night on MSNBC. You hear Congresswoman Liz Cheney and House Minority Leader Kevin McCarthy discussing the fate of then-President Trump shortly after the January 6th insurrection.
Is there any chance, are you hearing that he might resign? Is there any reason to think that might happen?
I've had some few discussions. My gut tells me no. I'm seriously thinking of having that conversation with him tonight. I haven't talked to him in a couple days.
McCarthy also said on the call with GOP lawmakers, President Trump had acknowledged some responsibility for what happened. Well, lawyers for U.S. Congresswoman Marjorie Taylor Greene today argued in court the Georgia Republican was engaged in legitimate political speech when she called for a response to Joe Biden's presidential victory prior to January 6th. Voters in Greene's district have said the Republican helped facilitate the attack on the Capitol, making her ineligible for re-election. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Nancy Lyons, thank you so much. Nancy Lyons in our 99.1 newsroom in the nation's capital. Sorry, I'm hurrying.
Go on. We got a great
exhausted.
story here.
It's, I think, among the most read on the Bloomberg.
Oh, it has to be. This story by our colleague Samuel Etienne. For those who know him, we call him Etienne. He's in our London bureau, and he was a rotator on Quick Take. So I got to work with him a little bit.
Okay.
But he writes this story. I modeled for Abercrombie. Netflix's White Hot doc is accurate. He said that the popular and exclusionary marketing strategy of oiled abs, gyrating bodies, and white picket fence Americana to brand identity is an accurate portrayal that's portrayed in the White Hot documentary on Netflix about Abercrombie & Fitch. He writes, I should know I was one of the shirtless models who greeted visitors to its stores.
Interesting. So firsthand account. The documentary is released this week. It showcases how the brand's ripped jeans and hoodies, once touted as a preserve of the upper middle class and privately educated, became sought after by, I gotta say, everybody, by a wider society who wanted to share in that aspirational image. But what's interesting is their businesses thrived. We know they were doing well. And then all of a sudden they weren't because of a lot of charges against the company.
Yeah, a slew of discrimination lawsuits beset the company. Interest in in-store shopping experience also dwindling. Whistleblowers, Carol, who were featured in the documentary, they revealed racial discrimination in hiring and working practices. The company was embroiled in several scandals, from selling children's thongs emblazoned with words like eye candy and wink wink, to the revelation that management ranked staff by their looks and how, quote, cool they were.
And he writes, the chief executive officer at the time, Mike Jeffries, had liked my look. Once I got cast in a modeling campaign for the brand, I moved from the back of the store, attending to fitting rooms, to greeting customers and becoming a shirtless model stationed at the entrance. I should point out that in the story, he does talk to current management, does get a statement from the company, and they say we're focused on inclusivity, continuing that transformation is our enduring promise to you, our community, and the brand's identity definitely has changed in terms of who they offer clothing for. So it definitely has made some changes, but it's a great read. It's on the Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. S&P ends a losing week, down 2.8% on the week, with capping a third weekly decline. Disappointing corporate results and prospects for aggressive interest rate hikes weighed on sentiment. The Dow lower today by 981 points, down 2.8%. The S&P down 121. NASDAQ down 335, a drop there of just about 2.5%. 10-year yield 2.90%. Spot gold down $18 the ounce, down 1%, $19.33 the ounce. West Texas Intermediate crude down 2.3%, $101.42 a barrel on WTI. Disappointing corporate results and prospects for aggressive rate hikes certainly weighing on sentiment. Among those earnings reports, Verizon down 5.6%, American Express down 2.8%, and HCA Healthcare plunged today by 21.8% after earnings. So again, recapping, down day with the S&P falling 121 points, down 2.8%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We've been talking about it being Earth Day. We've really been talking about it all week and certainly today. And in keeping with that, we have one of the founders of Silk Virago. They are a footwear designer, manufacturer, Tim. They strive to do everything in an ethical way, and that includes how they source materials to their practices and their partnerships.
We have joining us now Athanasia Diamantis Svec, the co-founder and chief revenue officer of Silk Virago. She joins us on Zoom from New York City. Athanasia, good to have you with us. You co-founded this with Danielle Goldman back in 2019. You're based here in New York. The shoes, though, are made in Italy. How did you guys get started with this? How do you start a shoe company?
Thank you so much for having me today. Yeah, that's a really good question. It really started with Danielle has been a vegetarian for a very long time. In fact, I used to make fun of her all the time because I was a very, very big meat eater coming from a Greek family. But in the past 5 years, I became a pescatarian, so I don't eat dairy, I don't eat meat. And we both kind of felt hypocritical because we didn't eat meat, and we were so passionate about animals, but we still wore shoes that were made with leather or bags or anything. So we both had different scenarios, and we came together, and she goes, I was looking for shoes. I couldn't find vegan, sexy shoes. And I was like, oh my gosh, I was just telling my mother I want to buy a new bag, but everything is made with leather. She goes, why don't we just start our own company? I'm like, yeah, okay, Danielle, sure, let's do it. Rolling my eyes, right? Because who starts a shoe company? And well, we did it. I mean, 3-4 years later, here we are with a collection and working on our next collection. And it has definitely been a whirlwind, first and foremost, not knowing anything about making shoes, working with a foreign country where neither one of us knew the language. And then, of course, getting hit with COVID right before our shoes hit the United States. So we had to put them away for storage because we couldn't sell them because nobody was leaving their homes.
Right. Well, I have to say, though, when I was stuck at home and basically living in bare feet, at one point I did buy a pair of high heels because I'm like, oh my God, I want to get back to my normal life, which is kind of crazy. So what I want to ask you, Athanasia, is that I think what's interesting is, I'm curious about how you do it and what are supplies like for vegan leather, and especially in an environment today where we're constantly talking about supply chains and pressures on it. Are you guys seeing the same pressures?
We didn't when we were developing. So when we were developing, we didn't have any shortages. We were just trying to, the biggest obstacle for us was that we're a small company, and a lot of these companies require for high MOQs, and we couldn't work with the
What does that mean? What does that mean?
Minimum order quantities.
Okay.
So they're looking for 5, 6, 7,000 pairs of shoes. And so we made 900. So that was one of our biggest difficulties. Right now, we're not seeing that right now. But again, we're also not making thousands upon thousands of shoes. Yeah, I'm sure we would have that problem now, for sure.
Where does, I don't know about this. I know where leather comes from. Where does vegan leather come from? How is it made? Give us an idea of where that all happens.
It really all depends. So we used polyurethane, which is plastic. It is much more sustainable, and obviously it doesn't use any animals. In fact, there was a study done where they analyzed all these different materials in shoe processes and found that leather came out to be number 14 out of 14, and polyurethane was 6. So 14 was the worst material that you can have. There are mushroom leathers. We are actually, in our next collection, we are using grape leather. So it's a leather that literally feels just like real leather, but it's made out of grape waste.
Wow.
So have a glass of wine while you're wearing your shoes and you're a complete circle.
Wine and shoes. You got me.
Wine and shoes.
Let's talk a little bit about, I'm curious more on the material here. When you say polyurethane and plastic, I think of oil and commodities and energy usage. Talk specifically about the sustainability with regard to that, because somebody could say, wait a second, plastic, that's like the worst thing for the environment.
Right, and it's not the best thing, but it's much better than animal and leather, right? So leather is, yes, a convenient byproduct of the meat industry, right? So they're already eating the cows, and so not to throw everything away, they use leather. It's more durable, but it uses so much of our emissions, right? So cattle, I think the percentage was cattle farms take up 30% of the world's land. Obviously carbon dioxide from the waste. And so, yes, plastic is not the best, but in using, we were new. A lot of the companies didn't want to work with new companies without any kind of collection to show for. So we had to use polyurethane, especially with our low minimum order quantities. And so now with the next one, we are using grape leather, so that obviously is much better than polyurethane.
So talk to us about demand that you're seeing, because you say, right, your production line is limited, right? And maybe you want to keep it that way, or do you want to eventually get to a point where it's a lot of mass production? Like, what's the plans for you guys?
We would love to up our production for sure.
Yeah.
We want to make a huge wave in the fashion industry and the footwear industry, because the footwear industry is one of the worst for our environment. In fact, I was just reading a study by Qantas where the footwear industry is responsible for 1.4% of the global greenhouse emissions. Now, that doesn't sound like a lot, but then air travel is responsible for 2.5.
So it's pretty high. Well, we talk a lot about the fashion industry and the impact on the environment, and it's pretty massive. Demand. Tell us. I think about the shoe market. I think about going to Saks and the whole floor is all shoes. I mean, there is so much out there, but I also feel like there's a consumer who's a lot more conscious about the climate and the impact. We've just got about 35 seconds left here. Tell us about demand for the product. What kind of growth are you seeing?
We're seeing a huge growth.
What's huge?
Fortunate. Yeah, we're seeing, percentage-wise, I don't even know off the top of my head, but we definitely are getting more people interested in our next collection, more people asking what they're made out of, more people asking about sustainability, and we're excited about that. We're excited that people are actually thinking about where their products, where their clothes, shoes, where it's coming from. It's very exciting for us.
Well, and we talk about a lot in terms of the consumer, like they are caring much more about how things are made and the impact on the environment. Anastasia, thank you so much. Really appreciate it. Athanasia, she's Diamantis Svec. She's co-founder and chief revenue officer of Sil Farago, joining us on Zoom from New York City. Check out the website.
Leather.
It's really fascinating.
I had no idea there was such thing.
They sent over a pair so we could look at a pair of boots, and
you're going to tweet out a photo if you haven't already.
I did already, and they're gorgeous. And I really do feel like it's innovation in the footwear space. We get to run. You have a great weekend.
Thank you. You too.
And everybody else, stay safe.